Good morning. Let's start with this second day of marathon. Now, today we'll start off with this audit report, and just to have a look at the weightage. This audit report comes under this chapter 8, and this is where you can see, and the marks are roughly around 10 on an average. So, and this is a lengthy one. This is not like the chapters that we have discussed yesterday. It will have a lot of technical points as well, but in by and large, it is manageable one. And if we cover this, we can expect around 10 marks of it. In this audit report, basically we have reporting standards, that is the 700 series, and then CARO. So this is what is spelled in this chapter audit report. If we go directly to it, it starts with SA 700 first, and then SA 705, 706, 710, 720. That's how it goes on. Now, SA 700 to begin with. The objectives of SA 700 are two, like we discussed, to form an opinion and to express that opinion. And while forming opinion, this is what is the chart that we can see. The objectives of SA 700 are two. One is to form an opinion and to express opinion. But what he is asking in the exams is basically the question on evaluations by the auditor. But to come to that, when the objective is to form an opinion, but while forming opinion, auditor has to keep three things in mind. Obtain SAAE, that is sufficient appropriate audit evidence, and ensure that uncorrected misstatements are not material, and then evaluations by the auditor. And this last point is what is being tested in the examinations. Now, if you look at evaluations by the auditor, it's coming for 3 marks and 4 marks and all this. The evaluations by the auditor are of two types: general evaluation and specific evaluation. General evaluation talks of two things. The financials are in accordance with the FRF, that is, FRF is the financial reporting framework. To put it in a simple terms, the template of the financials. So the financials that are prepared, is it in accordance with the required format of financials? Like if it is a company, then it should be Schedule 3. And if it is an NBFC, then it is NBFC form of Schedule 3, likewise. And the second one, qualitative aspects of the accounting practices. So how good the accounting practices are being followed. These are general evaluations. Apart from that, we do have specific evaluations. In this specific evaluations, first 2 points are on accounting policies: disclosure of accounting policies and consistency of accounting policies. Then the estimates are reasonable, and the following point, auditor to ensure that the information in the financial is relevant for the users in the understanding of the financials. And the last two are disclosures and terminology. So they both are appropriate. Disclosures are as per the required statute, and the terminology is appropriate to the requirement of it. So to cut it short, it flows from what are the objectives of SA 700. The objectives of the auditor under SA 700 are two: to form an opinion, to express an opinion. And to form an opinion, auditor must ensure three things: obtain SAAE, and uncorrected misstatements are material, and then evaluations by the auditor. Now, in the evaluations, we have got two types: general evaluation and specific evaluation. In the general evaluation, 2 points: the financials are in accordance with the FRF, and qualitative aspects of the accounting policies. And specific evaluations, disclosure and consistency of accounting policies, and estimates are reasonable, and information is relevant, and then disclosures and terminology. So this is what are the points. And looking at to express opinion, in the while expressing opinion, the exam point of view, there is a question which he is asking, like, what are the basic elements of an auditor? If we go straight to that, what are the basic elements of the auditor? It generally, it's a traditional question and it's a modern question as well. And generally it comes for 5 marks. There are two ways how we can ask. You can ask a generic question, what are the basic elements? Or you can handpick one of it and say, what are the auditor's responsibilities? What is the opinion paragraph? So first, if we see what are the basic elements, this is nothing but the structure of audit report. How audit report should be structured. First one, title. Second is addressee, and that is whom the report is addressed. Third and fourth relating to opinion. Third is opinion, and the fourth one is basis for opinion. in this basis for opinion, we have two matters or three matters rather: going concern, key audit matters, and other information. Then we have two responsibility paragraphs: responsibilities of management and responsibilities of the auditor. And then location of description. This is not a separate heading, but it is about the where do we disclose this auditor's responsibilities. And then finally, other responsibilities. And the last three, signature, date, and place. So to repeat it, first two are title and addressee. Next two are opinion and basis for opinion. And next three are responsibilities: responsibilities of the management, auditor's responsibilities, and other responsibilities. And last three are signature, place, and date. So this is the summary and at a header level elements which are envisaged in SS 700. So one question can be a broad question. It can be like this. Now just revise for the last time and then we'll move forward. Now what are the basic elements? First two are title and addressee, and the next two are opinion and basis for opinion. Next three, responsibilities of management, responsibilities of the auditor, and other responsibilities. And the last three, signature, date, and place. So these are the basic elements of auditor. Now in this is one question, and from exam perspective, he is asking specifically about 3 points. One is, what should be the title of my audit report, and what should be my opinion paragraph, and auditor's responsibilities. These three are being questioned separately. Now what should be the title? Now you tell me. Independent auditor's report. So the word independent must appear as a prefix to it. So when I say title, independent auditor's report. And then next two elaborate paragraphs are opinion and auditor's responsibilities. If you look at opinion, in the opinion paragraph, what all auditor should include here? So it is a descriptive, like how this is a lengthy, I mean in reality this is a paragraph type of writing, but from examination perspective, in that paragraph what are we including in the opinion paragraph? So in the opinion section of this audit report, auditor would be referring to, first he will identify the entity and he will mention the fact that the financial statements have been audited. And third one, he will identify the title of each statements, what are included, balance sheet, P&L account, or income and expenditure, whatever it is, he will give the title. And then refer to the notes, including summary of significant policies, accounting policies. And finally, the date and period covered by each financials. So it's a direct question. And we will be asked like, what are included in auditor's opinion paragraph? So in the auditor's opinion paragraph, following points are included. Identify the entity, mention the fact that whether the financials have been audited or not audited, and title of each of it, notes, and the period. So these are the 5 points that would come under this opinion paragraph. Then basis for opinion is all right, not being questioned much. But you tell me, there are two standards or two concepts that are being talked about in basis for opinion: going concern and key audit matters. So those will come in it. So SF 570 and SS 701, those standards will be talked about in it. Then management responsibility is all right. Management is responsibility for two things: preparing the financials, and that we will discuss. They are responsible for implementing internal controls, etc. and all that. But here for exam purpose and marathon class, we can afford to skip it because it comes into C class of topic. Auditor's responsibilities. This is a category. Now, if you look at auditor's responsibility, this chart will summarize. And it's a lengthy paragraph. In any audit report, the longest paragraph that we see is about auditor's responsibility paragraph. Now, in this auditor's responsibility paragraph, these are the contents that should be there in it. First one, state that the auditor exercises professional judgment and professional skepticism. And then he will describe about the auditor's responsibilities with regard to all these matters. That is, to identify and assess the risk of material misstatement and internal controls and accounting policies, and then appropriateness of going concern, and evaluating the overall presentation. So for all this, the auditor is accepting that it is his responsibility, and in case it is a group audit, then the auditor would add one more point on what are his responsibilities in terms of group audit. So this is slightly comparatively a tougher concept, but nevertheless it is worth to read because the mandatory questions are being asked. So to repeat it, now let's take one step back. What are the basic elements of audit report? First two, title and addressee. Next two, opinion and basis for opinion. Next three, responsibilities of management, responsibilities of auditor, and other responsibilities. And last three, signature, date, and place. Good. Now, what are the two standards that will come in basis for opinion? Going concern and the key audit matters. So, and then in the the detailed ones are title, opinion paragraph, and auditor's responsibility paragraph. In the title, 2 marks question, auditor report should always say independent auditor's report. So the word independent is mandatory to be disclosed. Then the opinion paragraph, which we have seen, and this auditor's responsibilities. These are the contents that must appear. And from exam perspective, since we don't have that much time, I can't give you this practice, but this is what you have to remember and write as a part of auditor's responsibilities. And one more latest question that he is asking is, since as I said, this location of auditors is a lengthy paragraph, and at times for certain entities, there may be restrictions even by the government. There may be expectations even by the government on responsibility paragraph. So which they would have, like things like C and AG, he would have already specified in his website. So, or NBFCs, they would have already specified in their website. So in that background, where should I disclose my auditor's responsibilities? There are three options. One is we can give it within the body of the auditor's report, like the paragraphs. And if we feel that is too long and that will deviate the reader's attention, then they can add it as an appendix to auditor's report. And the last one, if it is already described in any website, like I gave, like RBI, C and AG, or any other specific authority, then auditor would give specific reference. Instead of copying the contents from that website, he will be giving the description. He will be giving the description of the website where these are referred. So these, to sum it up, where can I disclose my auditor's responsibilities? Three places: within the body, as an annexure or appendix to the auditor's report, or reference to the website. So this is choice of the auditor, and depending on the scene, the auditor would take a professional judgment, whatever is appropriate for it. So this is where about this location of auditor's responsibilities. Now you tell me, where can I describe my auditor's responsibilities? Three options: within the body, annexure to the audit report, and a reference to the website. So these are the points. And then signature. Very rarely, not multiple times, but still he is asking on what is the format of the signature. Is it okay if I simply sign and give it? No, it's not simply not sufficient to just simply sign and give. There is a particular manner. So if he is signing on behalf of the firm, then he will say, for, like he has taken TUV Associates or XYZ and Associates, then he will have to say Chartered Accountants, and he is supposed to give the firm registration number. Then he will sign. And after the signature, that is before the signature, 3 point, name of the firm, Chartered Accountants, and firm registration number. And after the signature, 3 point, name of the member, designation, and membership number. And now for all this, from 2019 onwards, any certificate attested by the auditor, so by a chartered accountant, there must be a number generated which is called Unique Document Identification Number. In short form, it is called UDIN, and this is mandatory. And where do we generate this? These UDINs are generated in the portal of ICAI. So, and who will generate it? The auditor will generate it. So the auditor, the intention and the objective of it is to prevent the fake people signing them as a chartered accountants. So this number, anybody can check. So once I give this number, anybody can log into our UDIN website and check this, whether it is signed by it. So there is a entire mechanism. We don't have time to discuss because I intend to cover and help you with as many chapters as possible. So I'm skipping the detailed discussion. If time permits, I will come back to it. So to sum it up, UDIN, optional or mandatory? Now you tell me. Is it optional or mandatory? It's mandatory. Now, is it required on all certificates or only financials? It is required on all certificates, including financials. So, wherever attestation auditor is giving, every attestation must have this UDIN number. Then where do we generate and who will generate? Now you tell me, who will generate? Auditor himself will generate. The CA in practice will generate. And where it is generated? There is a portal, UDIN portal, backed up by this ICAI. So it is a part of ICAI main website, UDIN portal. That is where, and why only CS can generate? Because for logging into that portal, for creating the number, you require credentials. And that credentials, whenever you punch in, that is at the back end validated by ICAI. Membership number, your COP number and all. So that way, an outsider can be rest assured that this is actually signed by a chartered accountant. That is the purpose of UDIN. And the place and date. Then there was a negligible at final he is asking, and here he is not asking much. That is, in case, I will go back and just repeat for the last time, because this is a lengthy one and all this. Basic elements. Now quickly you tell me, whenever I am issuing audit report, it should be in accordance with SA 700, and my SA 700 requires uniformity in reporting, and under keeping that uniformity in mind, what are all the subheadings? That is what we call what are all the basic elements in the audit report. That is what is the topic of it. Now quickly revise. What are the first two? Title and addressee. Next two? Opinion and basis for opinion. And next three? Responsibilities of management, responsibilities of auditor, and other responsibilities. And at the end, signature, place, and date. Now, where should I disclose my auditor's responsibilities? What are the three options? Within the body, as an annexure to the report, or linking to the website, reference to the website. So that is what we have discussed. Now, the essence of this is, it is very easy to remember. In case the audit report, see, if there are, I repeat, I come from the beginning. If there are no specific requirements, then my audit report as an auditor, I would follow SA 700 and I will give according to the subheadings that we have discussed. But if any law had prescribed an audit report, so then what happens? And which is slightly different from these contents. So then what should I do? Then should I have to, because SA 700 is also mandatory, but doing audit under that act, the compliance with that act also becomes mandatory. So in that background, if there is a, to cut it short, if there is a specific format of audit report given under any act, what should I do? Now, should I still follow SA 700 or should I still follow that format? I have to follow other format because that is the requirement of the act. But then, while describing what I did, and to the readers, to give them confidence, I may want to tell them that I did, because I can't describe what all I did. Maybe I would have done the work for 2 months with 4 people. Now I can't say I verified the cash balance, I verified the cash book with invoice. I can't describe, so nobody can understand. That's where we simply want to say that we have complied with the standards and auditing while doing the audit, so that anybody can go and refer, okay, then how the auditor would have verified the opening balances. Because since I am saying I followed the standard, then go to the standard and look at it. Now, is it okay for if this verification? That way, for the benefit of the reader, how did I do my audit? I will simply refer to the standards on auditing. I say that because how an auditor should verify an going concern and all that we have discussed yesterday, and how an auditor should deal with the subsequent events, and how an auditor should deal with the opening balances, and what kind of practices are to be followed under audit sampling. Everything is streamlined. So therefore, instead of describing everything, I selected the sample, I followed statistical, all that, I can simply say I followed standards on auditing. It gives a professional look and it simplifies my description of what I did. So in that background, if a format is specified by any other law, then as an auditor, can I say that I followed standards on auditing? The answer is no. That is, you can refer that you have followed the standards on auditing only when that report, that format under other acts or other law and regulation is containing minimum of these subheadings. These subheadings are nothing but, you don't have to get confused. It may be slightly, the terminology may look different, but you can write even the basic element itself. So indirectly, by and large, whenever I am issuing audit report, which format should I follow? The answer is SA 700 format. But what if I am doing an audit under a special act and that act has a separate format? Then they say that then follow that format. So provided it must contain minimum basic 700 elements. That is what is the summary of it, but negligible. Then we will move on to SS705. Before I move on to it, let us look at the simple chart, which will give us look into and the summary of what are the various types of report. And once you are clear with the this chart, it will help us move forward easily to the next concepts. Now, what are the types of audit report? The types of audit report are of two types. One is unmodified, and second one is a modified opinion. And in unmodified opinion, we talk about SS700. So, and then modified opinion. This modified opinion, we have two types. That is, which do not affect my opinion and which do affect opinion. Which do not affect my opinion, there are two, EOM and OM. You tell me, what is the full form of EOM? Emphasis of matter. What is the full form of OM? Other matter paragraphs. And moving right side to it, the which do affect opinion under SS705, 2 points, either on account of misstatement or no evidence. If there is a misstatement, and then I will be issuing either adverse report or qualified. I'll slowly get into it. And if there is no evidence, then I would get into disclaimer or qualified of it. So this chart, if you have a control, it will help you get into and understand all this 705, 700, 706, etc. Now, let's quickly move on to this SS705. So SS70, because why I got into that chart is, the chart that is given in the ICAI material is not fully complete, or it may result into slight confusion. Say, here for example, this emphasis, the way it is given as if this is a heading and this is a subheading. That is not the way. But whereas here his intention is that when he says modified opinion here, all the following are the subheadings of it. So all this will come under modified opinion. But usage of the color, so heading, there is a slight confusion. That's where instead of this chart will give us a good entry into the concept of it. Now come back. Now this standard is about SS705. So if you come and see this, where my SS705 lands in, all this points, this is my scope. This is my area of discussion now under SS705. That is, wherever the auditor want to modify, that is where this SS705 would come into picture. Now, in the matter of modification, from exam perspective, since it's a marathon class, I will restrict. You are getting broadly two types of questions. One is, what are the circumstances why I modify? And next one is, what are the modified reports that I have? I repeat it. There are two questions that come. One is, what are the circumstances for modification? And second one is, what are the modifications? Now, the circumstances for modification are these two. That is, the misstatement and no evidence. That is what is this circumstances for modification. And what are the types of modified opinion? Three types: qualified, adverse, and disclaimer. But when to issue, which report to issue when, that is where this chart would be more. In the SS705, if you are good with this chart, your SS705 is done. So now under this, these are what he has given on the left hand side. These are, you can say, circumstances why I am modifying. So if we ask, why are you modifying? I will say this. The reason one is, financial statements are materially misstated, and second one, it is inability. There is an inability to obtain SAEE. That is why I am modifying. So this is question number one, circumstances. And then which type of report should I issue? That is when we need to understand, is it material and pervasive, or is it material but not pervasive? Now let's say materially misstated. And material but not pervasive, I will issue qualified opinion. And if it is material and pervasive, then I would go for adverse opinion. And similarly, if there is no evidence, putting it in a simple way, inability to obtain SAEE, if it is material but not pervasive, then I would settle for qualified opinion. Or if it is not only material but also pervasive, pervasive is having effect on the overall financial statements, multiple elements of financials, or if the effect is limited to one element, then that element is very significant. We'll come to it. So material and pervasive, then what do I do? So inability, that is I couldn't collect evidence and the impact of it is material and pervasive, then I will go for disclaimer of opinion. So this way, these three are the types of audit report, and these are the circumstances of audit report. Now, let us practice it. Earlier we have discussed SS700, now we are on to SS705. Now you tell me, what does this SS705 deal with? It deals with the modified reports. Now in the modified reports, from exam perspective, there are two different questions. One is, what are the circumstances why I modify? And next one is, what are the types of modified reports? Now you tell me first, what are the three types of modified reports? Qualified, adverse, and a disclaimer. And what are the circumstances for modified report? Two reasons. One is where financial statements are materially misstated, and the second one is inability to obtain. Putting it in a simple way, misstatement and no evidence. That is what it is. Now, looking at this diagram, you tell me, when will you issue adverse opinion? Misstatement, material and pervasive. Then you would go for adverse opinion. And when will you go for disclaimer? That is no evidence. When will you go for disclaimer? Column and row. Now here it is like a no evidence, simple one. When there is no evidence and the impact is material and pervasive, then the auditor would settle for disclaimer. Then when do you go for qualified opinion? In both the scenarios, if it is material but not pervasive, because this understanding will explain you the definitions of these types of audit. So now I will hold back, and because this is the only point that we need to discuss in SS705. So let's revise one more time. In this, now you tell me, SS705 deals with what? Modified reports. Now in the modified report, there are two probable questions. One is, what are the circumstances why I modify? The second one is, what are the three modified reports? Now you tell me the second one first. What are the three types of modified reports? Adverse, disclaimer, and qualified. And what are the circumstances for modification? Misstatement and no evidence. That is the simple, and later on you can elaborate. Now you tell me, when do I issue adverse report? Misstatement, material and pervasive. When will you go for disclaimer? No evidence, material and pervasive. When will I go for qualified? In both the situations, material but not pervasive. So your understanding of that will help you answering this definitions itself. Now look at adverse definition. What is adverse definition? Before reading, have an understanding. When I say adverse opinion, row side and column side, think of it. Now what are the permutation? Now you tell me for the last time. Adverse opinion. What are the two things that should coordinate? Misstatement, material and pervasive. That is what we will see here. The auditor shall express adverse opinion when the auditor, having obtained SAAE, concludes that there are misstatements, and these misstatements either individually or aggregate are both material and pervasive. So there are misstatements and these misstatements are material and pervasive. Then auditor would go for adverse opinion. Then disclaimer of opinion. Before looking at it, you tell me in a simple way, what are the two things that has to match for disclaimer? No evidence, material and pervasive. That is what he is saying. So the auditor is unable to obtain SAAE on which he is to base his opinion and conclude. And in his opinion, the possible effect of these undetected misstatements could be both material and pervasive. So these two combined, then it is this disclaimer of opinion. What is qualified opinion? Now you tell me in a simple terms. When will I issue qualified opinion? Both the scenarios, material but not pervasive. That is what you are going to highlight here. So wherever there is a misstatement, this is the point one, and material but not pervasive. And in the second one, there is auditor unable to obtain. This is my second point, and material but not pervasive. So to drive these definitions and to make sure that you are not missing on the key contents of it, this chart is the most important chart that you need to remember for SS705. That's all. And what do you mean by pervasive? This is okay. It's a small definition. Maybe randomly he can ask you, what do you mean by pervasive? This is the one. That is the effect of that item is not confined to one element. That is, there is a misstatement and the misstatement is impacting multiple elements of financial statements, or if it is limited to any one element, that element is substantial. So that is the second reason. And the third one is when it comes to the disclosures. So whether they are fundamental to the user's understanding. All these three would be decided for to see whether there is a pervasive effect or no pervasive effect. And one more small point. Earlier he used to ask. Now again I have to ask you, SA 700 basic elements, because the point that I am coming in will have a relation to it. Now you tell me quickly, what are my basic elements under SA 700? What are the first two? Title and the addressee. The next two? Opinion and basis for opinion. So I will stop here. Now say normally I will give opinion and basis for opinion. This is what I will give. But if it is my SA 705, now again I will ask you that base question. 705 deals with what opinion? Modified opinion. So when in the modified opinion, there are three types of reports that I am having: adverse, disclaimer, and qualified. So what he says is, if your conclusion is unmodified, then use the heading opinion and basis for opinion. This will happen under SA 700 unmodified. But if at all you do not, there are matters because of which say you decided to issue adverse report, then in the heading, if I decided to issue adverse opinion, then I have to say adverse opinion. This prefix is required. Or if you want to issue disclaimer opinion, then call it disclaimer opinion. If you want to call it qualified opinion, say that qualified opinion, so that the reader should know if you have not used any prefix, it is a clean opinion. Otherwise, auditor would be saying what kind of an opinion, qualified, adverse, and all this. So one prefix will get added over here, and since it is adverse opinion, the same chain follows. If it is opinion, basis for opinion. Now that it is adverse opinion, now I will say basis for adverse opinion. And similarly, if it is disclaimer, basis for disclaimer opinion. If it is a qualified, basis for qualified opinion. So all that summary of this point is, whenever you are issuing audit report with a modified opinion, then change the two basic elements. One is the opinion, second one is the basis of opinion. Don't simply you give the same heading. For a proper identification, modify it. So according to the type of opinion, adverse opinion, disclaimer, disclaimer. But whatever you are saying, accordingly this will appear. Basis for opinion also will get modified into basis for qualified opinion, basis for adverse opinion, or basis for disclaimer opinion. That needs to be given. And another point what he is asking is, when an auditor, because here we say that while describing this conditions, inability of the auditor to obtain sufficient appropriate, then what type of report I should issue? Material and pervasive, material but not pervasive. But what he says is, whenever there is an inability to obtain sufficient and appropriate audit evidence, why auditor is not able to obtain this? That is where the question comes. Is it because of management imposed limitation, or is it external limitations? Like during COVID, it is not the problem of the management. The government had not allowed anyone to go, and the government has not allowed anyone to open the offices. So as an auditor, I can't visit. So those limitations are external limitations. Company can't do anything. Or now the war kind of situations. Now you are not allowed to go to countries like Iran. Now at least it is easing up now. But otherwise you are not allowed. No flights were going. Commercial flights were going. At that time, there is a problem, but management can't help it. So it is external. That we don't talk about. But what this question says is, if you are not able to collect evidence, and that is purely because of management imposed limitations. For example, you wanted to take the stock take. Now, stock verification. But the manager, take any of the supermarket, like Vijay the supermarket or anything. But the owner says, I can't shut down the supermarket for your stock take. But when the shop is open, how do I take the stock here? There are customers everywhere. They keep buying it and they keep replacing it. I can't take the stock. So, but I want them to close. But the management is not willing to close. So that way, sometimes The management may impose certain limitations for their own business reasons, not that they don't want the auditor to work. They have their own challenges, they have their own business reasons. But our discussion here is, if the auditor is unable to obtain audit evidence, and that is mainly on account of management imposing that limitations, what an auditor should do. It's a simple one. Since it is a management imposed limitation, then I will request the management, I will explain them, this is needed, this standard want me to do it, otherwise this is the impact of it, I will describe. And if they agree to it and remove it, it is all right. But if they do not agree to it, so that is where the chat will come. So first I will request the management to remove limitation. If the management removes the limitation, then I can do the work my way, then there is no problem. Then I will proceed with the audit procedures. But if the management refuses to remove the limitation, the management is not willing to remove, then I will communicate to those charged with the governance. Now you tell me, between management and those charged with the governance, who is powerful authority? Those charged with the governance. So indirectly I am escalating, saying that your management is not giving, and without that I have no choice but to go for modification. I am trying to tell them. And if still I'm not getting any support, still unable to obtain it, then I will try to see what is the impact of this. Now, is it material but not pervasive, or is it material and pervasive? If it is material and pervasive, then I will go for withdrawal of it. If that is not accepted, then I will go for disclaimer. If it is material but not pervasive, I will settle for qualified opinion. So this is SS 705. Before I close, two things only you need to read in SS 705. That is, what are the circumstances of modified report? Now I am just hitting the exam questions. What are the two circumstances for modified report, and what are the three modified reports? Two circumstances for modified report are, putting it in a one-liner, misstatement and no evidence. You can elaborate to match it. And what are the three types of modified reports? Adverse, disclaimer and qualified. Now I want you to quickly tell me, when do I issue adverse? Misstatement, material and pervasive. When will I go for disclaimer? No evidence, material and pervasive. When will I go for qualified? Both the situations, material but not pervasive. Now, the impact of this will be there on my subheadings like opinion and basis for opinion. If it is depending on the type of opinion, I have to give that as a prefix. So, and finally, what happens if the auditor is unable to obtain audit evidence, and that is happening mainly on account of management imposed limitations? Now you think logically, what an auditor should do? Request the management to remove it. Now I did it. Now for this, two things can happen. Management may remove, management may not remove. If the management is removing, what happens? Then I can perform the procedures and continue. If the management is not willing to remove, then I will escalate it. That is, I will communicate with those charged with the governance. Still, if I don't get any support, then I will evaluate the impact. Now, that impact, what difference will it make? The impact may be material but not pervasive, or material and pervasive. Material but not pervasive, what report will I issue? Qualified report. Material and pervasive, ideally I should go for disclaimer, but when I am disclaimer simply says I can't express opinion. That is where what they say is, what is the point in issuing a report that is 6-page report by giving all auditors responsibilities and simply saying I cannot express? The people can't understand your terminologies. They think if you can't express a report, then why did you give a report? So that's why, though disclaimer is an option, but it may look little awkward for me. I've given a 6-page report and the reader is reading it, and only to know that I said I can't express. Then, because since they don't know our SS 705 and all this, they start thinking, if you don't want to express the reason, then why did you give the report? So in that background, that is where disclaimer is an option. That is a technical answer. But before disclaimer, as an auditor, because I may become a laughing stock for certain people, that's where I see whether I can withdraw from the engagement. So if that is possible, if it is in the early stages of it, it is all right, I can withdraw. But I've gone too deep into it. Withdrawing at this stage is not acceptable, and legally it can get me into troubles. Then I will continue and issue my disclaimer of opinion. So when you're answering, withdrawal is an option 1. If that is not acceptable, then go for disclaimer. This is your SA705. But whatever it is, whenever you are modifying, you need to communicate with this management and those charged with the governance. That is mandatory. Without communicating to them, I shouldn't modify. So this is what we have discussed thus far on SA700 and SA705. Now, before I proceed, since we are just trying to get into the topics, for these two standards, I will revise from the beginning so that we all get little energies, and then remaining ones can go on. Now, the topic that we are discussing is audit report, what we have revised, what we are revising, sorry. And the number of marks, you can expect somewhere around 10. But no surprise, because of Caro, even if you get 15 marks question. So, and it is a mandatory topic and you can't skip it, and it is a must to read chapter. Then in this, what are the contents that we have? I am repeating. So in this, you have basically standard 700 series substandard, which deals with this audit report, and you have got Caro. If you cover these two things, then you have covered your audit report concept. In this series of standards, first one is the 700. Now under SA 700, we discussed it yesterday itself. What are the two objectives of auditor quickly? Two objectives of, what are the objectives of auditor under SA 700? To form an opinion and to express an opinion. And while forming opinion, this is the overall chart, because there is a exam question here on evaluations, but giving the bridging that from the basics. There are two objects, forming opinion and expressing opinion. So from exam perspective, these two are, that is to express opinion and evaluation. These two are your exam questions. And what is this basis of opinion? That is what the elements that we have discussed, and evaluations by the auditor. So while forming, auditor must keep these two evaluations, general evaluation and specific evaluation. Under general evaluation, 2 points. Financials are in accordance with FRF, and qualitative aspects are covered over there. And specific evaluation, the 6 points have been covered with. So this is one type of question. Then the second question that you can expect is about the basic elements. Sorry, it's not moving. Just give me a minute. Yeah. So, and the second question that is happening, so still there is an issue. 1 second. Okay. So now it is up. It's been resolved. So under SA 700, the basic elements is one topic, what he is asking. Under basic elements, just to give you an heads up, traditional question is asking you directly what are the basic elements. But now, since you don't have that long questions, he is asking specifically to write about 3 points basically: title, opinion paragraph, and auditor's responsibility paragraph, which we have discussed that you should be good with. And then there's location of only once. He had asked, where should I locate my auditor's responsibilities? Within the body of it, or appendix to the auditor's report, or a reference to the website. So these are the 3 options that we have discussed. And then quickly we moved on to SA 705. Now in SA 705, 2 points: what are the circumstances for audit modified report, and what are the 3 modified reports. And this chart will help you answer everything, whether the question is on what are the circumstances, or the question is on what are the types of it, or the question is about asking you to define any one of it. All 3 it will take care of it. And the last content here is, what if there is an inability to obtain sufficient and appropriate audit evidence, and that is happening mainly because of the management imposed limitations, then what an auditor should do. So these are all the points that we have discussed here. Then moving to the third standard, EOM or OM, that is the emphasis of matter or other matter paragraph. This is the simple way that we can summarize. Considering this as a revision, I am just presenting the summaries. Now EOM or OM, what is the difference between this? The common point is both of them are refers to the matters relevant to the user's understanding of the financials. But then what is the difference between EOM and OM? If that matter is already present in the financial, then the auditor will be calling it as an emphasis of matter. But if the matter which the auditor want to alert the user is about other than what is presented in the financial statements, then he would give this other matter as the subheading to it. So to sum it up, what is this EOM and what is OM? EOM is about the matters relevant to users' understanding of financials which are being presented in the financials. So then we will call it as an emphasis. If the matter is about something which is not already there in the financial, then we would be calling it as an other matter paragraph. There are only two probable questions in this. One is like what you can see. This he'll just say that randomly define emphasis of matter paragraph and how it needs to be disclosed. So only two probable questions, very small standard. What is EOM and OM? And that is about this, like other matters is other than presented, and EOM is about what is presented. And the second type of question is, what are the matters to be considered by an auditor? Reporting related standards. Say, if you are issuing EOM, then what matters auditor should keep in mind, and if it is other matter paragraph, what matter he should keep in mind. That's all, very simple. Now, looking at this, matters to be considered in emphasis of matter paragraph, first the auditor should see that there is a separate paragraph, that is it is given as a separate paragraph with a heading saying that it is an emphasis of matter. So that has to be done. And since emphasis of matter is about the matters which are already present in the financials, then the auditor also should give reference to it. Suppose if the auditor were to say there is a fire accident in the factory and because of which there is a loss of certain material, then auditor had to say then which item it is impacting. So it may be impacting your inventories. So then you will have to go and talk about inventories, or out of that fire accident, if you had received some insurance and that is shown in other income, then you have to say that there is a loss which is reduced your inventories. However, it got offset by the insurance claim that we have received, which is disclosed in other income or netted off under inventories, whatever. That clear reference of that has to be given. And the third point is, auditor must also say that just because he is talking about this, he is emphasizing on this matter, it's not a modification. He has to clarify. Otherwise, general people may think when there is a fire accident and all, they may think auditor is unhappy. So we are saying that my opinion is not modified, but this matter is important to you. So these are the 3 points that should appear in whenever the auditor is describing emphasis of matter. I repeat, in this SS 706, very small standard. When you read it, it will get over in less than 15 minutes. First, you have to learn the definitions. What is EOM and what is OM? Emphasis of matter paragraph is a paragraph. So first one is, there is nothing here. And it refers to a matter which is appropriately presented or disclosed in the financials. But which matter? This is the matter in the auditor's judgment which is important for the fundamental understanding of the financial. That is, without knowing this point, you may not be able to understand the financials. Then auditor would prefer to emphasize that matter. In the other matter paragraph, everything else is same, but it is other than presented or disclosed in it. But at the end of it, there are two things. There are certain matters which the auditor wants the reader to know about it. And why the auditor want him to know about it? So that with that knowledge, he can understand the financials in a proper way. That is what is the intention of it. Then the matters that are to be disclosed. And examples very rare. That may not be really a priority one and all. So that is. And like in everything, whenever you want to give any EOM or OM, it is mandatory for auditor to communicate with those charged with the governance. So with that, 700 is over, 705 is over, 706 is over. Now, SS 701. This SS 701, you will get slightly confused in the sense about the importance I am saying. This is a new standard. It was not there. New in the sense it's almost like 6-7 years or beyond that. But it was not there along with the SS 700 and 705. This has come after that. So, because it was a new standard which has come close to 8-9 years ago, there were lot of questions, or I would say there were load of questions being asked for last 5 years. So, regularly he used to ask, because there is a new standard and a new requirement, They were asked. But now that it got settled, so again, if we see for last 2-3 years, it has been on and off. So, but nevertheless, it is to be rated as a type of standard and which you should be good with. Now, under key audit matters, first there are multiple questions that can come. What are key audit matters? How do you determine it? What are the what is it is not a substitute for? Many points are there which are being asked in the examination. Let's cover one by one. First one, what do you mean by key audit matters? That itself is an important point because it's coming like a tail question. He will ask you what are key audit matters? How do you determine them? What are key audit matters? How do you disclose? Likewise. So what are key audit matters? 3 points we should remember. Key audit matters are, which is in short form called KAM. It refers to those matters that in the auditor's judgment were of most significant in the audit. So then what is the difference between SS 706 and SS 701? SS 706, that is the EOM or OM, both are in the auditor's judgment. That is a common point. But if the auditor believes it is required for the user to understand, he will park it under 706, EOM or OM. But this is not really important or fundamental for the user understanding. It is just that the auditor want to describe what are the significant areas in the audit of it. So auditor want to talk about his struggles, or auditor want to talk about his challenges and how did he come out of it. So that is what is this KAM. But whereas our EOM or OM are the matters which the reader must read so that he can understand the financials in a proper way. But this is something about knowing, okay, when my auditor was doing, what are all his challenges? How did he overcome? So that is the difference between this 701 and 706. So coming back here, whenever you are defining KAM, 3 matters. First one is simple, refers to those matters. Second one, in the auditor's judgment, and third one, which are most significant in the audit. That is what is the, these are the 3 points that you should remember in KAM. Now, what is the purpose of this KAM? Why this standard has been introduced? This standard has been introduced for 2 things: to enhance the communicative value of it and to assist the user in understanding the areas of significant judgments that are made in the financial statements. These are the 2 purposes why this has come into it. Then how do you determine this key audit matters? So this key audit matters are determined for determining a matter as a key audit matter, auditor would see whether any of these are there. One is areas of high assessed risk of material misstatement, that is where the item is so significant it can go wrong, high risk of material misstatement. Second one, significant auditor judgment, wherever the auditor had made any judgment and the judgment is a very significant, it can go either way type of it, that is what he will be calling it as a KAM. And the third one is the effect of the audit, the effect on the audit of the significant events or transaction, that is wherever there are any events that had happened and which are having significant effect on the audit, that also he wanted to talk about it. So determining key audit matters, 3 things: high risk of material misstatement, and the significant auditor's judgment, and significant events impacting the audit. These are the 3 points that will determine or that will help the auditor in knowing whether it is a KAM. Moving to the further point of it, communication with the communicating key audit matters. So these key audit matters, like EOM, it has to be given under a separate subheading, and the subheading must be KAM. Now you tell me, since we discussed under SS 700 basic elements, what are the points that comes in? Now where do my KAM comes? So KAM comes in the basis for opinion paragraph. So in the basis for opinion paragraph, there are 2 standards that comes: going concern and KAM, SF 570 and SS 701. That is where this point also should go and sit in over there. So this key audit matters will come as a part of, and this will be disclosed under your basis for opinion paragraph and with a separate subheading. And the most important, very, very repetitive one out of this is, this key audit matters is not a substitute for 4 items. What are the matters? This is the most important. You can't afford to ignore this at all. And there are multiple questions being asked in multiple attempts. So indirectly what he says is, when this SA701 has come, they want to emphasize that this is a new requirement. It has not come to replace any existing one. So same point he is trying to say, it is an additional requirement and not a substitute for the following. What are the ones? The disclosures in the financials. Whatever you have to disclose in the financials, you must continue to disclose in the financials, even if you are disclosing in the KAM, but still go ahead and disclose in the financials. It's not a substitute. And second one, auditor expressing a modified opinion. So wherever auditor had to express a modified opinion, that what we discussed, adverse, disclaimer and qualified, you have to express it. And just because you talked about your struggle here, that is the KAM, it will not be sufficient to bypass it. So wherever you have to modify, modify. Whatever you have to disclose, disclose. And third one, reporting requirements in accordance with SFI 70. Yesterday we were talking about how auditor had to deal with this going concern. What happens if it is appropriate, inappropriate, doubt, there is a uncertainty, all that. Whatever it is, you must continue to follow that. And just because an item is already disclosed in KAM, you shouldn't stop it. So to certain extent, there will be a duplication of reference. One under KAM paragraph and the other one under whatever it is. And the last one, this KAM generally talk about one particular item like inventories, maybe the books of accounts. Take for example, there is a fire accident in the stores and all the store books got gutted under fire. Now the company is not having any books to do it, but as an auditor I can't go for a disclaimer. So then I started asking the company, how do we do the audit? How do I get to the value of it? Then the company, whatever the backup they have, and then the using other documentation of MIVs and GRNs, they started rebuilding the stock register. So then it becomes a KAM for me, because there was a challenge in getting the inventory data, but somehow they have resolved it by rebuilding it. It took some time, but they were able to resolve it. So in such a case, my KAM talks about only inventories, but the rule under this SA700 or even the general one is, auditor should never express any opinion on individual matters. Auditor opinion of true and fair should be on the overall financial. Auditor can't say, I'm okay with cash and bank balance, but I'm not okay with sales. And I'm okay with the debtors, but I'm not okay with the creditors. Then that is not acceptable. Auditor cannot give opinion on individual matters. Whenever he is giving, okay, if that is okay, this is not okay, then by and large, can I depend on it or can I not depend on it? So by that mode, auditor should never express any opinion on individual matters. But here when in the KAM I am talking about specific items like inventory or something, then will it result in auditor expressing opinion matter? That's why they are clarifying. It's not a separate opinion on individual matters. So to repeat it, now I want you to tell me this, because this is important point. Before that, we'll first revise what do we mean by KAM, and then we will talk about what it is not substitute for. Now, you tell me, when I say KAM, what is the full form of it? Key audit matters. Which standard deals with that? SA701 deals with that. Now, while defining, there are 3 points that I have to say, A, B, C. A is about those matters, and B is about in the auditor's professional judgment, and the 3 is about most significant in the audit of it. So, that is, these are what? KAM. Now, you tell me what you remember. It is not a substitute for what? Disclosure in the financials, modified opinion, SFI 70, and opinion on the individual matters. So, and each time he is focusing on something and asking. Now, considering its importance, I will ask you again. KAM is not a substitute for 4 items. Now, what are the 4 items? Disclosure in the financials, modified opinion, SFI 70, and not an opinion on the individual financial statements. I request you to repeat it. So because you are just days away from the exam, so that this revision should come of some kind of help to you. Now, giving a pass here, let's revise all the important topics out of what we have covered out of this. Now, you tell me, we have covered 3 standards as of now. What are the standards that we have covered? SA700, SA705 and SA706. 701 we are onto it. Now, what are the basic elements? title and addressee, first two. Next two, opinion and basis of opinion. Next three, responsibilities of management, responsibilities of auditor, and other responsibilities. Then last three, signature, place and date. Now UDIN, optional or mandatory? Mandatory. Now is it required only on financials or certifications? Everything, every attestation by the auditor must have a UDIN. Now who will generate that UDIN? Auditor himself had to generate. And where will he generate? UDIN portal. So, and it has to be disclosed in the report, whatever he is attesting to it. Then, under 705, what are the three modified reports? Quickly. Adverse, disclaimer, and qualified. What are the two circumstances? Misstatement and no evidence. Adverse report. When will I go for adverse report? Misstatement, material and pervasive. When will I go for disclaimer? No evidence, material and pervasive. Good. And when is qualified? Both the situations, material but not pervasive. Wonderful. So, and whenever there is a limitation, wherever there is an inability to obtain sufficient and appropriate, that too on account of management imposed, listen to the situation and tell me the answer. There is an inability for the auditor, and that is on account of management imposed limitation. Auditor has requested the management, but the management is not willing, and then he escalated to those charged with the governance. They are also not helpful. Then what an auditor should do? Evaluate the impact, and if the impact is material and but not pervasive, qualified. Material and pervasive, disclaimer. But will he go directly for disclaimer? No, he will opt for withdrawal. So withdrawal is not permitted, then he will go for disclaimer. Good. Now EOM and OM, which is about what is already disclosed in the financials. EOM, and OM is about something which is not disclosed in the financials. Now again I will come back. KAM is not a substitute for four items. Disclosure in the financials, modified opinion, SA 570, and not an opinion on the individual matters. Good. So with this, that is over. Then the next point is, when an auditor had to communicate this KAM, and whom he'll have to communicate. Auditor will have to communicate them to those charged with the governance, and when he will have to communicate both the situation, whether there is a KAM or whether there is no KAM. If there is a KAM, he will include that matters. If there is no KAM, still he will have to say that there are no KAM. But mentioning is mandatory. So this is about the disclosures of this matters with those charged with the governance. With that, our SA 701 comes into closure. Then SA 710. Mostly students will not be so comfortable with this, but it is important. Not a very regular one. I would call this as a B category standard. Not a repeat question, but he is asking on and off. And whenever you get it for 5 marks. So therefore, it is better to revise it. Now under this, since it's a revision and expecting that you all have listened once, I will directly go to the summary. There are 3 words that are involved in this. One is comparative financials, second one is corresponding figures, and third one is comparative financial statements. Now, when I say comparative, it's all what he's saying is, whenever you look at financial statements, you will have 2 columns. One is current year and one is the previous year. So, in that background, he is asking, whenever you are giving comparative, you may be giving comparative under 2 different approaches. One is a corresponding figure approach and the second one is a comparative financial. And under corresponding, this is what he is trying to say. There are 2 types of comparative information. One is a corresponding figures and second one is a comparative financial statement. And the corresponding figure is the one which generally we follow. That is in the schedule 3 format and all that. Whenever you give previous year, we are following this method, corresponding figure. Under this method, auditor does not refer to the previous year, though you are giving the numbers, but audit opinion will refer only to the current period. He will not be referring to the previous figure. So that is under corresponding. Whereas in the comparative financials, audit opinion refers to each period on it. So that is what is the difference between comparative financials and the corresponding method. Our schedule 3 presentation is basically a corresponding figure method. Then there are 2 points that will come. First is this clarity in beginning terminology. Then comes to corresponding. Under corresponding method, as we discussed, the thumb rule here is, since you adopted corresponding method, you will not be referring anything to the corresponding figures. Audit opinion shall refer only to the current period and not to the corresponding figure. But there are certain exceptions. These exceptions are what are being asked in the examination. What are these exceptions? First one is simple. Prior period audit report is modified and that matter of modification is unresolved, that is, it is still open, it is not closed, and is impacting my current year financials. So only then, so there are three matters. Previous report is modified, A. B. That problem because of which I modified is still not addressed. So it is still unresolved. And the third one, because it is not resolved, it is impacting even my current period. So that is when auditor, though it is a corresponding figure, he may have no choice but to refer it to the corresponding figure. And the second one, prior period report is unmodified. That is, the previous auditor had given a clean report, but there are misstatements. So that is, while doing the current year audit, you have identified certain misstatements in the current year. Then you will have to refer to the corresponding figures. And the third one, when it is not at all audited. Now, these are the three scenarios when auditor would be referring to corresponding. Otherwise, as a thumb rule, under corresponding figures, auditor opinion should not refer to the corresponding figure at all. Now, you tell me the exceptions. Exceptions, first one is, previous report is modified and the matter of modification, is it resolved or not resolved? I'll repeat again. There is a modification in the previous report, and that modification, is it resolved or unresolved? Unresolved. And the third one, is it negligible for the current year or is it impacting my current year? It is impacting in the current year. So then I have to go and mention that this problem is arising on account of event that had happened in the previous year. So whole logic is, whenever I modify the essence of that, you can by heart, but unfortunately I don't have time to go and give more examples, but still I will touch. What it says is, whenever, the thumb rule you need to know for this, whenever you are modifying, you are a professional and you can't talk like a prophet. So somebody's like astrologers and all, it will happen. Now your stars are shining in 2027. I can't give a vague statement. I'm a professional. So whenever I am modifying, qualified or adverse or disclaimer, I must give the reason. So why I had to choose that report. So it is mandatory. I have to give the reason for my modification. Let's take our example. The entity last year, they constructed some compound wall, something like that. And the entity, that is the company, has treated that as a revenue expenditure. So because they did major repairs, there was already a compound wall, but that was very weak. So it was only like wooden structure. Now they gone for a concrete one. So it is getting a different look to and different life. But nevertheless, the company believed it as a repairs so that they can claim the tax benefits out of it by claiming 100% depreciation. They have taken to repairs to the building. But the last year auditor felt that, or even if I am the auditor, last year itself I told them that that is a capital expenditure. Take it to the capital account and provide depreciation. But they have not addressed. Now, therefore, last year I've already mentioned your profit is understated and this capital item is not capitalized and taken to repairs. I was expecting at least in the AGM members also will question and they will correct. But they didn't correct. Now, when I came for the current year, still it has not been, no JV has been passed. So now what I feel, my depreciation in the current year is also wrong. So, and when I say that my depreciation for the current year I do not agree, what is the reason? The reason is not in the current year transaction. The reason is about the last year accounting treatment that had happened. But that is where the first rule comes. As an auditor, you don't talk about the previous year. You talk about your year. So, but I have to talk here. I have to give the reason. So, to clarify that point, auditor may have to refer to the previous figures. So previous year incidents, that is what is the background. To sum it up, there is a modification in the previous audit report and that matter of modification is unresolved and impacting in the current period. Then I can comment on the corresponding figures. Plus, the report is unmodified, but misstatements exist. Third one, it is not at all audited. And similarly, there is the last question that you will get here is, what are the matters you have to keep in mind if it is a comparative financials? If it is a comparative financials, then you have to keep this period. Under comparative financial method, the audit opinion refers to each period. So, therefore, there is no problem of referring to corresponding. In fact, you have to refer to it. But then what is the problem? The problem here is if the prior period audit opinion is different from the current opinion. That is, I am the auditor. Last time I have given some opinion, but now when I'm plotting in a comparative, normally this would be a requirement when you apply for loans to a bank or when you are presenting the prospectus in financials in the prospectus and all that, where you have to give the 5 years report. Now, ROC may say, now get a confirmation from the auditor of this, get a confirmation from the CA that all the 5 years data is correct. So that is when this comparative financials would come into picture. Now, since ROC want me to confirm each year, now as a chartered accountant, I take out last 5 years financials, I see whether they have plotted in the prospectus correctly, and then I will give a statement, then each year is tallying with the audited financials. Likewise, my opinion will talk about each period. But while doing this exercise, I realized there was a totaling error in the balance sheet. That time I have given a clean opinion, but now I see that maybe I was a little careless at the time, or it was an oversight. So now I want to correct it. So, but as a professional, because that mistake is accepted, let that continue with the mistake. I'm a professional. Even whenever I realize that it's my mistake, I should stand up and say it's my mistake. So therefore, now I want to say that now the financials are not correct, what I have signed. So there is so those kind of scenarios. If your opinion at that time is different from the opinion now on the same financials, then include that with the substantive reasons in the other matter paragraph. And the third point, prior periods were audited by another auditor. Now we are only doing this comparison. Then make that point more clear. I didn't do the audit of last time. I only did the comparison. Mention this in the other matter paragraph. And the last point, not at all audited. So if you think logically, first point is the rule actually. That is, under comparative method, audit report shall refer to each period. That is the rule. Then 3 scenarios. Previous opinion is different from the current opinion, but I am the auditor. In the second case, I am not the auditor, somebody else did the audit, I only did the comparison. The third one is not at all audited by anyone. So these are the scenarios that we are talking about it under comparative financial statements. So, and there is no challenge on referring to the corresponding figure because I can refer to them very much and all. So with this 710 is also over. And then there is a small discussion on joint audit, SA 299. Now this is a fairly easy one. Earlier there used to be flood of questions on this, but now very rarely he is asking. So important, but not that frequent. Now joint audit. What do you mean by a joint audit? Joint audit is a scenario where more than one auditor is appointed to issue this opinion, to express opinion on the financial report. And all that auditors are called joint auditors. Advantages, disadvantages, I am skipping. I will go directly to the core points where he can ask you. These are the points that you should remember whenever you are revising this. Just for your comfort, I will make them as 1, 2, 3. Otherwise, all this may look like same point. So these are the points you should be good with whenever you are reading this joint audit. But otherwise, he may ask, ICAI can ask anything as a surprise question. But if he want to ask the concept related and the updated one, because this SA 299 recently got updated. So these 3 points are added in that SA 299. What are the 3 points from exam perspective? There are other amendments in the SA 299, but what matters to you in CA Inter? These 3 points. Now, when I've got multiple audit firms, because yesterday we discussed, preparing this audit strategy and the audit plan are the prerogative of the auditor, not of the management. But here I got multiple audit firms. Then which auditor will have to plan? So preparing this audit and strategy is every joint auditor shall get involved. He is not like, say you and I are appointed as joint auditor. I can't tell you, you prepare the plan, I will follow. That's not acceptable. Each joint auditor shall follow. Then engagement letter. Just let me see how much you remember. Who will give this and to whom it is given? Auditor to the management. Then what is the letter given in a reverse way? Management representation letter. Now, if you think logically, That is the letter we are saying auditor will give to the management or management will give to the auditor. But I have got multiple auditor here. So there are more than one auditor. Then is it that every auditor will give to the management? On that, the point it is clarified here is the company will not give one copy to everyone. The company will address everyone in a common engagement letter. They will not give separate engagement letter to each firm. So common engagement letter and common representation letter. So both the ones. Management will give common MRL and all auditors will give common EL to the company. So this is the second point. And the third one, that is whenever there are joint auditors, joint audit is different from double audit. So in the double audit concept, every transaction is verified twice. But joint audit, every audit is not verified twice. Auditors are going to divide the work. So now, however you are allocating the work, so there must be a written document called work allocation document, and that work allocation document has to be signed by each joint auditor. So if you are good with these 3 points, the new ones are taken care. And from the traditional point of it, then there are 2 stock questions what he is asking, that is this point, responsibilities. Once you divide the work, each joint auditor is responsible only for the work allocated to him. So that is once you divided the work, and now you tell me, let me see whether you are able to connect. What do I call the document where the joint auditors have divided the work? Work allocation document. Who will have to sign? All joint auditors will have to sign on it. So once the work is divided and entered into work allocation document and signed by everyone, that becomes a basis for us. But nevertheless, then what will be our responsibility? Say if you have decided to do fixed assets, I have decided to do share capital. Whatever the area you are doing, you are responsible. Whatever I am doing, I am responsible. That way, each joint auditor is responsible only for the work allocated to him. Say, that is, I need not review how you are doing. So, your work, you do it, you are also CA, you are responsible. That's how the premise goes by. So, to conclude, each joint auditor is responsible only for the work allocated to him. But there are certain situations where all the joint auditors or where the joint auditors would jointly and severally would become responsible. What are that situations? Now, first one, work not divided, and second one, common audit areas, and the third one, matters brought to the knowledge of other auditors, and the fourth one, compliance of statutes, and the fifth one, presentation and disclosure of financials, and the sixth one, audit report compliance. So it's easy because it's a stock question. Earlier traditional questions, it was almost a repeat question, but now he is not asking. So ABC are different and DEF are different. DEF is all about the compliance. Compliance with the statutes, compliance with the financial statements, and compliance with the audit report. For these compliances, all joint auditors are collectively responsible. And the first 3, where all the joint auditors are jointly and severally responsible, work not divided, common audit areas, and where there is a common agreement. So that is, work belongs to you, but you approach me and we have a common agreement. Now let us revise the 6 points, and then with that it will come to a closure. Then we will have to move to Caro. We will go for a break of it. Now let's revise this. Where the joint auditors would become responsible jointly and severally. What are the 6 situations? First one, work not divided. Second one, common audit areas. And the third one, common agreement. That's a one word you can say, common agreement. And what are the 3 ones? Last 3 ones are about compliances. Now compliance of what? Compliance of statutes, compliance of financial statements, compliance of audit report. So for all this, auditors are jointly and severally responsible. And one last point in this is reporting. So when there are multiple audit firms here, 2 or more than 2, then how will they give individual report? So that is where it is. Generally, they will be able to give the common audit report, but in case there are disagreements between them, then each auditor is entitled to give his own report. And whenever he is giving separate reports, then they will be mentioning in the other matter paragraph. So indirectly, the rule of majority doesn't apply here. So to sum it up, what are the reporting requirements? Generally, they will give common audit report, but wherever there are disagreements, then they can give separate reports. Wherever they are giving separate reports, they must mention in the other matter paragraph. So, and the rule of a majority doesn't apply to this joint audits. So, this is what are the major points on this SA 299. With this, all the standards we have covered, and we will just go for a 10 minutes break, and after 10 minutes break we will get into this last discussion and the important discussion. Out of your 10 marks from this chapter 8, 5 marks are from Karo perspective minimum, and even all 10 also may be from Karo. He may ask 2 questions from Karo, but 1 question definitely will be from Karo. So we will get into Karo post our break for it. So go for a break of 10 minutes. Okay, let's continue. So after discussing the standards in this audit report, now finally we'll have to go back to this Karo. And for going for this Karo, I want you to understand this small summary about the section 143, which deals with the audit report and the reporting related matters in it. There are 4 subsections under 143, the important ones: 143.1, 143.3, 143.11, and 143.12. 143.1 relates to matters of inquiry. It was a traditional question. He used to ask you what are that matters, and there was a lengthy discussion, but of late it has been sidelined, so I'm not covering over here. And there are 6 points under this matters of inquiry, which the auditor had to inquire, and whether he will report or not report would depend on he is satisfied or not satisfied. If he is not satisfied, he is going to report, but if he is satisfied, there is no further duty for him to report that he is so satisfied. Whereas 143.3 and 11 and 12, whether he is satisfied or not satisfied, a comment is mandatory on all this. Then what is the difference between each of them? 143.3 is the main audit report, where we have certain questions, and again in the traditional he used to ask, but now he is not really questioning you. So in the marathon class I am skipping, and in this 143.11 is what we will be discussing, and this Karo I will elaborate further to it. And 143.12 is a fraud reporting, so where auditor will have to report about the fraud and all that. Then 143.11 Karo. So that is what is our point of discussion now. So when we say this Karo, we are talking about companies auditors report order. So 2020. Now under this Karo, the first point, you have been asked questions on the applicability of Karo. So for whom it is applicable and for whom it is not applicable. Now Karo is applicable for all companies unless it is exempted. And it is also applicable for foreign companies and government companies and branch audits. And it is not applicable for all this: banking, insurance, Section 8, OPC, small company, and private companies, specified private companies. And what are those specified private companies? First one, that private limited company not being a subsidiary or a holding company of a public company. That is, it must not be a subsidiary or holding of any other public company, and then satisfying these 3 conditions: paid up capital, and reserves, and total borrowings from banks and financials, and then the total revenue. Amounts are 1 crore or 1 crore and 10 crore. Now let's revise it. Now you tell me, for whom Karo is applicable? What is the single one rule? All companies unless it is exempted. But from exam perspective, then is it applicable to foreign companies? Is it applicable to government companies and all that? The answer is yes. Now tell me for whom it is not applicable. Banking, insurance, Section 8, OPC, small company, and specified private limited. Now in this specified private limited, point 1 is it should not be a subsidiary or holding of any public company. And then 3 parameters: paid up capital and share capital, borrowings from banks or financials, and total revenue. What are the amounts, threshold limits? 1 crore, 1 crore, and 10 crore. All conditions are any one condition. All conditions are to be satisfied to claim exemption. That is, even if they fail to satisfy one condition, Karo becomes applicable. So this is basically on the applicability of Karo. But still, that needs to be discussed further in terms of what is the definition of this term, reserves and surplus, and all of it. But considering the time, I'm not getting into all those, but I will get into this borrowings, which is asking, and it may cost you 5 marks. This borrowings, how do we apply this borrowings? Say, is it like aggregate of the borrowings, or is it like, say, since the amount is, I'll come to here. Since the amount is 1 crore, what if the company has borrowed from two banks, from one bank 75 lakhs and another bank 75 lakhs? Individually it is less than a crore, but aggregate it is more than a crore. Then how do I apply that limit? So all these borrowings we will have to apply on an aggregate basis. So that is what I'll move it to the top. So this limit applies to aggregate of all loans. That one word can get you 5 marks. And the other point is, there are funded advances and there are non-funded advances. Now the non-funded advances are like your LCs, BGs and all that. So what we consider here is only the funded advances. So it shall not include any non-funded facilities like LC, BG, etc. These 2 points are the core points of it. Remaining I am not really covering here. And when you talk about operations, it includes even income from your discontinued operations as well. Not only continuing operations, even from discontinued operations as per your standard. So these are all the prime points of it. And once the CORO is applicable, then what happens? Then there are certain matters which auditor had to report on it. These are class wise, and whichever are important I will tell you. The first point is important. You can mark it as that is all relating to PPE and most important for your exams. Look at the summary. Since we don't have time to have a detailed discussion, what are there are 5 points that are covered in PPE, but what are the first 3 points? First 3 points are whether the company is maintaining proper records, including quantitative and the location, the situation. And second one, whether there is a physical verification and that is conducted at reasonable interval. Any discrepancies, then did they adjust? And the third one, title deeds. This third one is important because this is what got added from the earlier CORO. Now, title deeds. Whether those title deeds are in the name of the company and whether the title deeds are available for verification. Now, if the title deeds are not available in terms of mortgage and lost and all that, if it is a mortgaged asset, then you require confirmation. And if the title deeds are lost, then auditor had to ask for FIR. So this will become the basis for you. But these title deeds, auditor need to verify for its availability only for immovable properties, that to accept the leased premises. Other than that, for movable assets and leased assets, auditor need not look at the title deeds. And the next 2 points, which are amended, particularly in CORO 2020, that is revaluation of PPE or intangible. Has it happened? And in case it is happened, 2 points. Is it done by a registered valuer? And what is the amount of change? So if it is more than 10% of it, a disclosure is required. And the second point they need to cover is, are there any benami properties? That is, are there any proceedings that have been initiated by the respective authorities under this Benami Acts and all that? So in which case the disclosure is required. So 5 points under PPE: proper records, physical verification, title deeds, revaluation, and Benami property. So these are the 5 points that are to be disclosed under PPE. Now I want you to tell me, because since this is important, let's revise. Now you tell me, for whom CORO is applicable? What is the one-line statement? All companies unless it is exempted. Now, is it applicable for foreign companies? Yes. And government companies? Yes. Now, for whom it is not applicable? Bank, insurance, Section 8, OPC, small company, and specified private companies. Now, what are the 3 conditions for private companies? Paid up capital and reserves, borrowings, and total revenue. What is the amount? 1 crore, 1 crore, 10 crore. Any one condition or all conditions? All will have to be satisfied to claim an exemption. So, and once with regard to borrowings, 2 important points. Is it individual loan or aggregate of all loans? Aggregate of all loans is what we take. So, and the second point, will it include funded or non-funded? Only funded is what we take. Non-funded we will not take. So that is what is the summary of this. Then for PPE, now look at it and tell me. There are 5 points you have to remember with regard to PPE, where auditor had to comment. What are those points? Proper records, physical verification, title deeds, revaluation of PPE, and Benami properties. Now, in the title deeds, generally I will verify physical title deeds, but in two cases I may not be able to see. One is a mortgage, second one is a lost. What is the solution for mortgage? Confirmation from third parties. What is the solution for lost title deeds? FIR. So FIR had to be obtained. And with regard to revaluation, 2 points are important. Registered value, and when the disclosure is required, when it is more than 10% of it. And for Benami properties, whether any proceedings have been initiated. So these points is what are to be covered under PPEs. Then for inventory. For inventory, it is only 2 points. The second clause talks about the inventory. In the inventory, there are 2 points. One is the physical verification, and the second one is company has been sanctioned working capital limits in excess of 5 crore. The second point take 3 stars because that is what you have the probability of getting it in the examination. Now, whether company has been sanctioned working capital limit in excess of 5 crore. So, if that is the case, then whether the quarterly returns that are filed with the bank are in agreement with the books of accounts. So, that is what is to be captured by the auditor and all. But one very traditional question, because physical verification we are doing it for fixed assets, that is the PPE, what we call, and inventory. But for PPE, what is the interval within which they have to conduct? Once in 3 years. And inventory, once a year. So, this is what is the periodicity for conducting this PPE. Now, for physical verification. Then the third class, that is the third class, is all about loans and advances. And this may come in final. It is very unlikely that a question may come for you at CA inter-level. Otherwise, this is a lengthy class, but not really relevant for you. Under this, these are the 5 points that are covered. Terms and conditions of that loan, whether they are prejudicial to the interest of it, and stipulation of repayment schedule, whether the company is regular in payment. And the third one, if terms are not stipulated, then disclose what are the aggregate amount of such one in terms of the total one. And then if it is overdue, and particularly overdue more than 90 days, then whether the company had taken reasonable steps for recovery. And the last one, whether any loans were renewed and fresh loans were given to in the place of the old loans. That is what is, then auditor had to give this comment. So this class, you can mark it as a C category, whereas PPE and inventory are the most important ones. Now, revise about PPE, because since that is important for you and you must have good control on it. Now, tell me about PPE. Proper records, physical verification, title deeds, revaluation, and Benami property. Now, 2 points under revaluation. Registered value and amount of change if it is more than 10%. So, now in the case of title deeds, is the title deed verification to be done for all immovable properties? That's a question he had asked once. It is for immovable properties, but is it required for all immovable properties? The answer is no. It is not required for all immovable properties. It is required only for immovable properties other than lease ones. So, the application of it is very, very narrow. It is not applicable for movable. Then is it applicable for all immovable? No. It is applicable only for immovable properties other than lease. So, that is what is the one. Then for inventory, what are the 2 points? Fiscal verification and working capital loan. Exceeding what amount? 5 crore. Then what is that auditor had to inquire? Quarterly returns filed with the banker or in agreement with the books of the company. That's all he need to verify. But what is the frequency within which I have to verify? I have to conduct fiscal verification of fixed assets PPE. 3 years, once in 3 years. And inventory? Once a year. That is, those are the points. Good. And the C point, as I said, it deals with the loans and nothing much to get into this. Then fourth clause, clause number 4, it deals with provisions of 185 and 186. This is also, you can mark it as C category. For simple reason, you don't have 185 and 186 in your curriculum. So therefore, the probability of questions out of that are limited. Otherwise, what is to be reported here is whether the requirements of, that is the loans to the directives and all, whether the requirements of section 185 and 186 has been complied. If not complied, what are the details? And similarly, what are the audit procedures that are to be performed? Auditor had to see the board resolution and members resolution and the disclosures. So negligible for you, so I am not getting deep into it. Then clause 5, mark it as A category because it is important for you to identify which one you have to read and which one you can take a chance. So this fifth point is important. Take 3 stars and mark A because this 73 and 76 you study. It is about the deposits. Then directly looking at the summary, what are the points that are relevant over here with regard to acceptance of deposits? So wherever the company had accepted deposits, then we have to see, did they comply with the RBI regulations and then section 73 and 76 of Companies Act and any other provisions of the Companies Act relevant to such acceptance. If not complied, then we will disclose the nature of non-compliances. Apart from the general compliance, in case there are any specific orders, either by RBI or CLB or NCLT or tribunal, then auditor will have to comment about it, the compliance. So this is about your deposits. Then 6, negligible, section 48, that is whether wherever cost records are required to be maintained, did they maintain? So negligible one. 7th one, mandatory. It all talks about your statutory dues. So there are, look at the summary. Statutory dues, there are 2 types. One is undisputed and second one is disputed. And undisputed, that is you don't have anything to dispute. You also know that you have to make the payment. Then did you make the payment? Is the company regular in making the payment? If not regular, any areas in excess of 6 months will have to be reported by the auditor. And if it is disputed, because you are disputing, you don't want to pay, then they won't talk you whether you are regular in payment because you are disputing. Then what is to be done? Then the disclosure. So from exam perspective, these tables are important for you to put both the tables in one frame. These tables you have to learn and remember. If it is undisputed dues, then the disclosure should be in this format. So for all this, more than arrears of 6 months and over, that we will have to disclose in this format. If it is disputed, then you have to disclose in this format. So learning this table is what is a minimum mandatory as far as statutory dues are concerned. So that is on statutory dues. Then moving this further to it, then this 8th point. 8th point is also important and take 3 stars to it, and there is a probable question that can come out of it. That is, in case if there is any surrender or disclosed income during the previous year under tax assessment, I'll simplify it. Say in the previous year, you've gone and surrendered certain income to the tax authorities, maybe under schemes, or there was an income tax right, or whatever it is, or in response to your notice, appeals and all that, where you have surrendered and disclosed a certain income which you have not disclosed previously. So now the tax authorities will ask you to pay the tax and pay the interest and pay the whatever the penalty. They are fine with that. But when you have gone and confessed in front of income tax, but then you should come and update your financial books as well, because the financial statements you have filed with the ROC. So what's happening is people are accepting and committing to the income tax, but people are not bothered about ROC. So that is where this point has been brought in. In case you have gone and surrendered or disclosed any undisclosed income to the tax authorities, then make the proper adjustment to the financials as well, books of account. So that is what is the requirement under this clause 8. It's a new requirement and the auditor will have to comment on that. Then the 9th point, it's all about the defaults. Say, defaults to whom? Defaults to 2 set of people. One set is banks, PFIs and government dues. Other set is the debenture holder. So wherever there are defaults, then auditor should disclose the lender-wise details are to be given for the first 3. But for debenture holders, since the debentures could be many in number, lender-wise details are not required. But otherwise, a disclosure to that extent is required for compliance of it. Then in this 9th point, B and C are also most important. C is a traditional one, but B is the most important. Take 3 stars to it and mark it as a category if it is not taken. Willful defaulter, underline that word and become familiar. So That is, in case the company has been declared as a willful defaulter by any bank or financial institution or any other lender, then auditor had to disclose it. So this point will come again for us in our chapter 5, and where the company had to disclose this in the financials, but under Caro, now the auditor will have to disclose. So this willful defaulters list is made public. There is a lot of background, and considering the time constraints, I will not be able to get to the details. But just to sum it up, for all willful defaulters, the RBI has asked all these banks and financial institutions to put their list on the website, so that it's like a public defamation. So in such a case, as an auditor, I have to look at the list of willful defaulters and see whether my clients are there in it. And if my client is listed in that willful defaulters list, then I have to describe. So, and I have to mention the fact here. Then the C point, it is a traditional point, but still he is also asking in the modern type of questions. That is, whenever any term loans are taken, whether they have been applied for the purpose for which it is bought. If there is diversion of money, then auditor had to bring out that purpose. What is the diversion and all? And the D point, short-term loans have been used for long-term purposes. Because if short-term funds are being used for long-term purposes, you will have a working capital crisis. So then it will eventually result in a company being wound up. So going concern issues can arise. That's why, as an alert, auditor will comment, is the company diverting short-term funds for long-term purposes? The E point, whether the company has taken any funds from any entity, that is, company is borrowing on for the purpose of, for the benefit of subsidiaries. So to meet the obligations of its subsidiaries, associates or joint ventures, this company is borrowing. Then tell your shareholders that this is what the company is borrowing, but not for its sake, but for the sake of its subsidiaries. Let the members decide why do we need to borrow, or what decisions are to be taken, or sell that subsidiary and be done with that. But as an auditor, if the company had taken any loan, but that loan is not for their sake, but the loan is to meet the obligations of their subsidiaries, then the auditor will comment on that point. Then the F point, if they have raised any, it is the other way around. Company has taken loans, but in the E point, talking about E and F, in the E point, your company is a generous mode. That is, company has taken loans to meet the obligations of subsidiaries. But in the F point, company is a little taking advantage of its subsidiaries. Companies has taken loan. This company, your client, has taken loan by keeping the pledge of securities of subsidiaries of your subsidiaries and joint ventures. What will happen if you don't pay the loan? Then the subsidiaries' investments will be frozen and the bank will sell them. So they will become bankrupt. So that is what is these two scenarios. But in all this, auditor will make a disclosure to it. Then the next point. Money received by this, you take 3 stars to this point, what you are seeing on the screen, the 10th point. There are chances that he can ask you on that, because you study both of them. This is the point that he is talking about it. That is, the funds raised by way of IPO or FPO. What do you mean by IPO? Initial public offer and further public offer, or term loans. In such a case, application of funds for the purpose. So is there any diversion of funds? That is what it is. And in case the funds are not applied for the purposes, then the delays and defaults and any subsequent rectifications, auditor will brought it out. Likewise, he will also do that for private placement. So both the things, whether you are taking it as a capital, you are taking it as a loan. But if there is a diversion, you told everybody I need the money, but you are diverting. That is what this point both will come. First one will come about term loans or share capital, IPO, public issues. And the second point talks about the private placement. So the common point is, has it been used for the purpose for what it is bought? Otherwise, auditor will disclose on the non-compliance of it. That is, what is this application for the purpose? Then the 11th one, he is asking deeper one. This is also take 3 stars, or in fact you can take even 4 stars to it. He is asking little conceptual. So we will have to hold back and discuss whether any fraud by the company or on the company. So I will just put the slide in. front of it. So to save time, because we need to cover a lot, so we'll have to increase the pace of our discussion. So I'm getting into the summary. Under this, because under 143.12, auditor has already talked on the frauds. But under CORO also auditor is inquiring on the frauds. But there is a difference. That is what we need to note. So restricting to CORO, what are the frauds that auditor is talking about? Both frauds by the company, frauds on the company, but it is limited only to its employees, officers and employees. That is the directors and the employees. Officer is a director, shadow director, and all that we discussed, KMPs and all that. So by officers or employees, meaning which loans are not covered under here? The frauds on the customers is not covered, and the suspected frauds also will not covered. So it talks about only confirmed frauds, whereas under 143.12 even the suspected frauds also auditor will comment about it. That is the difference between these two. And the disclosures. So here what is that we need to disclose? If at all there is a fraud on the company by the employees, then what is the nature of fraud and what is the amount of fraud? But while disclosing, auditor will have to keep the materiality in mind. So small frauds he can ignore. Look at here and tell me, so that you understand the type of questions that can come. So he is asking, what are the reporting requirements in the audit report under Companies Act, that is 143.12, or CORO for the following situations? Now you tell me whether it will come or not come. A fraud has been committed against the company by an officer. Is it included or excluded? Included. The second one, fraud has been committed against the company by a vendor. So by vendors, that is what is getting covered under this, both 143.12 and CORO, only frauds by the employees. That's all. Company and the employees. That's all. So company cheating vendors, vendors cheating company are not included. So therefore, B point will not come under our purview here. Then the third one, company has committed a major fraud on the customer. Company cheating customers, included or excluded? Excluded. So inclusion list is very simple. Only employees and officers. That's all. Rest all, that is the customers and all these people will not be there in it. Then fraud has been reported in the cost audit report but not noticed by the stat auditor. So this again under 143.12, auditor will include only the frauds which are suspected by him. But under CORO, auditor will report about the frauds, whether he has observed it or it has been brought to notice by someone else. So in this case, the scope is little wide to that extent in this CORO. So not only the frauds what the auditor had identified himself, but any fraud brought to his knowledge, like in the cost audit report, cost auditor had identified. Under CORO, I have to report it. So these are all the specific points that I have to keep in mind. To refresh you all, now under CORO, what frauds I am going to cover? First, I cover both the frauds. Company cheating others and others cheating company. That is frauds on the company, frauds by the company. But only limited to employees and officers. That's all. And which one I will not cover? Vendors and my customers. That I will not cover over here. So that is, these are the points that you need to remember for this fraud reporting. Now, let us go to the B point. In the B point, he is talking about ADT4. So under 143.12, you know that if the fraud is more than 1 crore and all, the company will, the auditor will be filing ADT4 with the central government. So in case such reports are given, then auditor had to give the details over here. And C point, whistleblower compliance. That is, whenever the auditor is commenting, whether the auditor had considered whistleblower compliance for reporting purposes. Generally, they will also be talking about certain frauds that are happening inside the company. So therefore, to say whether frauds are there or not there, have you considered, have you read this whistleblower compliance? Because under Companies Act, generally they are supposed to maintain a register of this compliance by the employees and all. So based on that, he is talking. Then the 12th one, take 3 stars to it. This is also important. He is asking questions on that. So under this, if the company is a Nidhi company, then we have to see these points. That is, Net owned funds to deposit ratio should not be more than 1:20, the summary of it. And minimum unencumbered deposits, the company must maintain 10%, and the default in the payment of interest on deposits or repayment thereof, in case there are defaults, then the auditor will have to give the details. So this, it's a direct question. What you get is, write a short note on what are the compliances to be complied with the Nidhi company and all. So to repeat it, this clause is applicable only if your client happened to be a Nidhi company. Then if it is a Nidhi company, 3 points auditor had to talk about. First is net owned funds to deposits and unencumbered deposits, and then default in the payment of interest or deposits. And net owned funds to deposit ratio is 1:20, and minimum unencumbered term deposits are 10%, and default in the payment of interest or deposits are, in case there are there, then auditor will be giving the list of such details to it. So this is about this Nidhi company. Then related parties, you can ignore it because he may not be asking much. Compliance of 177, 178, because you don't read them. 188, you don't read them directly. So C category. Only thing is whether approvals and disclosures. Related party, those are the 2 points that will come. So, and then 14 point is again C category. It talks about having internal audit system. So whether the company is having internal audit system commensurate with the size and nature of business. And in case yes, then have you read internal auditor reports? That auditor had to comment. Then 15th one, non-cash transactions. In case anything entered by the company with the directors and all this, then did they comply with 192? Again, the probability of this is less because you don't discuss 192 in your curriculum. So at inter level, it is doubtful, but he is talking about only non-cash transactions with entered. Then the next one, 16th one, if the company is required to be registered under section 45 IA, that is under NBFC, then whether registration has been done, and if it is already registered, whether that certificate is valid. So these points will have to be disclosed. And similarly for these companies, if at all there are any CICs, so negligible. I mean, expecting a question out of this is very rare, so I'm just rushing it. And where because you don't discuss this NBFCs in detail, so at your level, the CICs and all that, he is not making you familiar. So therefore, he may not ask questions to that great level. And in case the group has more than one CIC, they have to. That is the core investment companies and all, they have to give. Then the 18th one, 17th one, whether the company has incurred cash losses. Take 3 stars to it because these were not there in the earlier Coro. They have been added over here. So if the company has incurred cash losses in the financial year and in the immediate preceding, that is 2 consecutive years, if there is a cash loss, then auditor will mention that there is a cash loss because company has not become sick, but in 2 years, you are having cash losses. Indirectly, you are alerting the shareholder that take care, your company is getting into an insolvent situation. And then the next point, whether there has been any resignation by the statutory auditors during the year. In case there are resignations, then any objections or concerns raised by the outgoing auditor, whether it has been taken into consideration, that has to be clarified. And next point, based on the financial ratios and the expected date of realization, auditor had to confirm whether the company is capable of meeting its liabilities. Do you think can the company meet its current liabilities? So all the liabilities, that is one auditor had to confirm. Then this 20th point is about CSR. Ongoing project and other than ongoing project, you know the timelines, so 60 days and 6 months and all that, whether they have been taken care, so in the Caro. So and the same CSR, even in the financials there are inclusions. We will cover them in our chapter 5. And the last point, it is about consolidated financial statements, and what you are doing is an audit of a consolidated financial statements. Then are there any qualifications in the individual units of it, so in the components audit? So in case it is yes, you have to talk about it. But under this, one question he is asking, and one point I want to alert you. Caro is applicable for all companies unless it is exempted. But is it applicable for consolidated financial statements? The answer is no. So, CARO is not applicable for consolidated financial statements unless, except this point. So, except this 21 point. In the 21 point, all that they say is, if at all there are any adverse comments given by the auditor in the components, then I have to bring it over here. I got 3 subsidiaries. One subsidiary auditor had given adverse remarks about inventory, and in the other one he has given about PPE. Then I will come and say that in this consolidated fund. So otherwise, CARO is not applicable for consolidated audit of consolidated financials. Only exception to this is 21st point. So with this CARO discussion is over, and with this CARO discussion, chapter 8 also comes to an end. Now, having covered, then let's take the another big chapter. So, because these two, if we cover, most of the critical standards and all will get covered in it. So, kindly open chapter 4, audit evidence. So, in this, we will be discussing mostly the find it series. And if this chapter is covered, then most of your standards are covered in it. Now, under SA 500, what do you mean by audit evidence? Say, it's a lengthy chapter, so I have to go in a selective mode to see that we will be able to cover all the important standards. And revision of this chapter is mandatory. If you don't touch this chapter, then the revision is not complete, because it's all about the hardcore standards that you are having it. So we will spend time, but wherever it is easy for you to manage and all that, I will take advantage of skipping it, and whichever is critical, whichever is important, I will touch it. Now, first one, what do you mean by evidence? Evidence, and we are discussing now SA 500. So under, when I say audit evidence, I am talking about the information used by the auditor for arriving at the conclusion based on which his opinion is based. So he is asking one question here from exam perspective, MCQ, that is, what is depending on what? So that is opinion and evidence. Which will influence what? So your evidence will influence the opinion. So that is why he is indirectly saying opinion is based on evidence. It's not the other way around. So it's not that evidence is based on the opinion. Opinion is based on the evidence. Then whenever the audit, important topic, so which he is asking, and I want you to be good with this also. It's coming for 5 marks. Evidence, whenever auditor is gathering, this evidence, normally the background of that is, we are chartered accountants and we are financial people. So whatever we verify are basically financial records. So from that background, is it that all the evidence that the auditor gathers comes only from accounting records? So that is why he says that no, certain evidence comes from not only accounting records but also from other information. Then examples. What will come from accounting records? Accounting entries, invoices, contracts, subsidiary ledgers, and supporting records and all that. You can take all that, all from the accounting records. You can write even more than that. Debit notes, credit notes, whatever it is, you can write all that. But other information other than accounting records, which are helpful for auditor to obtain audit evidence, minutes, written confirmation, and manuals. So to sum it up, whether the auditor will be collecting evidence only from accounting records, the answer is no. He will collect certain information, certain evidence, even from other information as well. Look at this number 23 question for 4 marks. So all that they ask is this only. Illustrate with the 2 examples what is the information contained in accounting records and what's the information contained in other records. So I'll repeat it. The audit evidence doesn't come only from accounting records. Certain evidence you gather even from other information like minutes, written representation and all. That is what he is talking about it here. Then you tell me, This one you are clear about it. First I will tell you, then I expect you to revise. There are two types of audit evidence, based on the nature and based on the source. Based on the nature, visual, oral and documentary. Based on the source, internal and external. Now, I will ask you to, because since you all would have read and SF500 is an easy one, I will take liberty in directly getting into the depth of it. Now you tell me, depending upon nature, what are the three types of audit evidence? Visual, oral and documentary. Now visual, oral and documentary, which is more reliable? Documentary is more reliable. Now coming to this, depending on source, what are the two types of audit evidence? Internal and external. Which one is more reliable? External is more reliable. But then, do I need to collect internal at all? So, though external evidence is more reliable, but auditor must still collect the internal evidence. That is where a question can come, because he is asking you in the examination. So why should auditor collect this internal evidence? This is what is the sheet that you are seeing on the chart is what is being questioned in MCQs. What is more reliable? No doubt external evidence, because it is coming from third parties. But that doesn't mean auditor will gather only external evidence. Auditor will have to gather internal evidence, and he has to try to match your internal evidence with the external evidence. Like the bank balance, you take the bank book and you also take the bank confirmation letter. So auditor has to match both internal and external one. Then further to it, the another one important concept, reliability of audit evidence. When audit evidence becomes more reliable, when it is obtained from independent sources, that is the third parties, and when controls are effective, evidence becomes reliable, and evidence obtained directly by the auditor, meaning who is collecting from whom? In the third point, when it becomes more reliable, it becomes more reliable when the auditor is directly collecting it from the third parties, rather than management collecting the evidence and then forwarding, because they may manipulate in the transmission. That's why any evidence directly collected by the auditor will be more reliable than collected by the management and given it to the auditor. Then what the management will do? They will go through. In case it is not that, they may manipulate and send you the corrected documents. So that's the background. And fourth one, a document, anything obtained in the documentary form, and the fifth one obtained in the original document. So these colored ones are the bullet points that you should remember. Now I want you to revise fast. Based on the source, what are the two types of audit evidence? Based on source, internal, external. Which is more reliable? External is more reliable. Then can auditor ignore internal evidence? No, he has to gather and match it with the external evidence. Then when an audit evidence becomes more reliable, I want you to tell me this. When obtained from independent sources, when controls are effective, obtained directly by the auditor, obtained in documentary form, and provided in original documents. So these are the cases when the audit evidence becomes more reliable. Then sufficient and appropriate audit evidence. Now you tell me quickly. Sufficiency refers to what? Quantum. And appropriateness refers to quality. So then any one of it or both of it? Both. That is, the evidence that I am gathering should not only be sufficient but also to be appropriate. So just to touch from the exam perspective, you may get a question asking you to write a short note on SAAE, sufficient appropriate audit evidence. So when you say sufficient appropriate audit evidence, it stems from two different words, sufficiency and appropriateness. So when you say sufficiency, you are referring to quantum. When you say appropriateness, you are referring to quality. Now the sufficiency, this left hand side one is more important from as a short answer question. So that is, what is the matters that the auditor should consider while deciding whether the evidence is sufficient enough? 3 points: materiality, risk of material misstatement, and size and characteristics of the population. These three matters auditor will consider to see whether this evidence what he has gathered is sufficient enough. So then let's move forward. This is the same one. This is also a most important one. Now, audit procedures for obtaining audit evidence, the most important one. He is asking for long questions, short questions, all types of it. How do I gather my audit evidence? That is what is the question. Now, what are the various audit procedures? Inspection, observation, external confirmation, recalculation, reperformance, analytical procedures, and inquiry. Now, first let us look at it. We will revise it. What are the first three types? Inspection, observation, and external confirmation. What are the next two? Recalculation and reperformance. What are the last two? Analytical procedures and inquiry. So the type of question that you may get is, will the auditor gather all the audit evidence only through inquiry? So inquiry is the only method through which auditor obtains evidence. Likewise, he keeps teasing you. So auditor gathers evidence through multiple procedures. So now repeat it for the last time. What are the first three procedures? Inspection, observation, and external confirmation. What are the next two? Recalculation and reperformance. What are the last two? Analytical procedures and inquiry. So these are the procedures that through which the auditor would gather this audit evidence. Then risk assessment control procedures I am bypassing. We will get into this important topics of assertion. Now, look at here. This topic is an latest type of concept. That is, it has been asked only for last 3 years. Otherwise, at inter levels, you never had this discussion on assertions. Now, I will also tell you what are the kind of questions that you get it. Now, in this, first let us discuss it and then we'll talk about the type of questions. What do you mean by an assertion? Assertion is nothing but it's a representation by the management, either explicit or implicit. So, but there is a representation by the management. But what representations? Then are we referring to MRL, that the representation letters and all? No. These representations are already embodied in the financial statement. They are not going to give you additional letter. These representations which are made by the management, they are already embedded in the financial statements. Which financials? Used by the auditor. But why is he using? Because is it that he want to invest in the company? No. He is using them for expressing an opinion to see whether there are any potential misstatements. So, to sum it up, what are assertions? Assertions refer to representations by the management, whether explicit or implied, whichever it is, that are embedded or embodied in the financial statement used by the auditor to consider the different types of misstatements. Now, what are these assertions? Say, first type of question I will tell you. One is this, he can ask you, what are the types of assertions? Then that would depend on classification or classes or transactions or events or account balances or disclosure. And the second type of question he is giving is, which is also he is asking, he will give an extract of the financial statement, either of the PPEs or of the debtors or of the P&L, certain extracts, and ask you what assertions can I make. Now, let us cover this first and then we'll go to the top of it. Is a standard new type of question. He will exactly give an extract like this and say what assertions are there. Now, by looking at it, that is what assertions are. What are assertions? These are the representations by the management. So when the management is presenting this, what is that they are trying to tell? So the management is trying to tell the people by giving this in the financials that company owns this asset. Because if it is a leased one, they would have taken it to P&L, the rental cost. If they're showing it in the balance sheet, then the very fact that company is the owner of it. So company owns this plant and machinery. Now you tell me, what are the other assertions you can make? Once they give this, now the company is the owner. So that is the one. Then this 2 lakhs, is it market value or the historical value? Historical cost. So because we always record on the historical. Market value we don't record. So the other assertion is, we don't know the market value, but the historical cost, that is what the company paid, is 2 lakh rupees. Now the third assertion. Now you tell me, is the company using this asset for business or for personal purpose? Business. Why do you say so? Because depreciation has been claimed. So because depreciation has been claimed, the asset is being used for business purposes. They don't say these assertions anywhere. They don't write it, but they are implied. So, and the explicit assertions are depreciation. Now I will ask you one more question. Is it that the company bought this asset only in the current year? No. Why do you say so? Because there is a accumulated depreciation, so that they are giving. And what is the amount of depreciation? Explicit assertion. The total accumulated depreciation on it is 70,000 and the current year depreciation is only 13,000. Then my final question, is the asset still existing or is it scrapped? Existing. Why do you say so? Because it carries a net book value. So these are what assertions. That is, they are saying without saying. So that is what are the assertions. They are mentioning, they are telling you. That is, they wanted to make a representation, but without giving anything in writing. So those are what are. That is why these assertions, what the management is giving, the representation they are giving, they are already embedded in the financial. It is implied, or some of it are explicit, like value of the 2 lakh and all that. Some of them are implied. Company is the owner. So that is what are that assertions. So when he gives it, now let us summarize. Now you tell me. Looking at this chart, because he is asking repeatedly this question, and at times he is asking for 8 marks. So now you tell me, what are the various assertions that can be found by the auditor here? Tell me various ones, whatever you can think of it. Title, that is the company is the owner. And second point, historical cost. 2 lakhs is the historical cost of it. Then the company has not bought this in the current year. The company has bought this in the previous year and it has been used for the purpose of business and the asset is still existing and the value of the depreciation up till now and what is for the current year. So this is how you will have to talk about. This is one model question. The another model question is like you see here, 8 marks. What are the different categories of assertions? That is what he is asking. So this is something you have to by heart. So you can, whether you remember through acronyms and all, but you have to by heart. So these assertions are classified into 3 different buckets based on the transactions and events, account balances, and presentation and disclosure. Now based on accounts and transactions, occurrence, completeness, accuracy, cutoff, and classification. And based on account balances, 4 types. Existence, that is the asset is still existing, asset or liability, and asset or liability the company has right or obligations, and completeness and valuation and allocation. And last one, disclosures and all this. But one common question is asking, because you will be by hearting, there is no other go. What is the common assertion across all 3? Completeness. So that he is asking. Completeness is required as far as classes of transactions are concerned and account balances are concerned and presentation and disclosure are concerned. So there are 3 points in the assertions. What do you mean by assertion? What are the types of assertions? And what implied assertions or explained assertions you make when an extract of balance sheet or P&L is given. These are the 3 types of questions that you get, and this is something you got to by heart and remember that. Then audit trial. I will just give a brief of it. One mandatory question he is asking, because there is a new requirement and it has come into effect only from 2014. So he is at 2024. So he is asking questions. What is audit trial? Audit trial is a documented flow of a transaction. That is from the source till the end, like from entry to the financials, how the document has moved. So from entry level to the financial statement level. So that is an audit trial. Now what they say is, it is mandatory for companies, particularly whoever are using electronic ones. In the manual ones, it will already be there. There will be a purchase order. You can see the date, you can see the signature, then you can see the invoice. I can always call invoice and the purchase order and see which one raised first. Any discrepancies I can order. Physical, there was no problem. But this audit trial is a requirement for companies using accounting softwares. So for companies using accounting softwares, they made them mandatory to retain this audit trial. So that is what is the expectation of it. So it will describe the activity, user activities, so and the type of recordings that had happened, and it will also give an evidence as to the authentication and integrity of transactions. So therefore, auditors should see that the company has proper audit trail maintained so that every transaction can be tracked from the source to the finish. So that these are what is this audit trail. To cut it differently and what you can quote, you can say that now every company's auditor has to include a statement on the presence of audit trail and whether the audit trail has been altered. So it is mandatory for the company to give this audit trail and all. Then in the same SA 500, there is a small discussion on expert. Actually, there is a different standard, but he has given only information in bits and pieces. So what is this expert? Now, when you use the word expert, you're talking about a person having expertise in the fields other than accounting and auditing. Now, there are two types of expert, management expert and auditor expert. When you say management expert is the expert appointed by the management, and auditor's expert is an expert appointed by the auditor. So, since the auditor is appointing his own consultant, he will rely. But the question comes, can an auditor rely on the management expert? So, that is where he is saying, auditor can also rely on management expert provided he is satisfied on these points. One is competencies and capabilities of the expert, and understanding of the work of the expert, he should understand and do that. Third one, relevance of the work. So for him, that is, whatever the expert did it, is it relevant for the auditor? Because we focus only on the financial statement. So will it matter to me? So considering this, auditor would see whether he can rely. Now I want you to revise. Who is an expert? What is the definition? Having expertise in fields other than accounts and audit. Why we are excluding accounts and audit? In these two areas, you yourself is the expert as a chartered accountant. So, other than this, if somebody is there, then he is called having expertise, then we will call him expert. Now, you tell me, what are the two types of experts? Management expert, auditor expert. Now, who is appointing management expert? Management is appointing. And who is appointing auditor's expert? Auditor. Now, if you are the auditor, which expert you will trust more? Auditor's expert or management expert? Auditor's expert, because he is the guy whom you have gone. So you trust him, so you have gone. So you rely on him. There is no doubt on that. But can you rely on the management expert? So that is where you got to see that. What are the competencies and capabilities, and whether he understood the work and the relevance. Is that work relevant? After considering, you will see whether auditor can rely on him. Then we come to the last point in this SA 500. What happens if there are inconsistencies or doubts over the reliability of audit evidence? So, if there is inconsistency or doubt over reliability of audit evidence, then auditor will determine the modifications to the audit procedures. If that is not possible, then he will evaluate the impact, and if required, he will modify the report. So, this is one negligible piece of it. So, with this, that SA 500 comes to an end. Then internal auditor. This is actually a new standard and amended standard, but for some reason in your exams, it is categorized as only B, because he is not asking that frequently. So I will cover this, and then we will go for a short break of it. And once you are back from it, we will cover the remaining 500 series of the standards. Now, in this internal auditors, listen to it, because when you read it, it will be difficult for you to understand. It's a lengthy standard and complicated standard. So let's look at the summary piece of it. Now, I will talk about the important concepts out of this internal auditor standard, and I will alert, when you read on your own, it may result in confusion. So follow these summaries. Now, what are the ways how this external auditor can use the internal auditor? There are three ways. One is obtain the information from the internal auditor. I'll put it in a student way so that you can understand. Like, say you are the internal auditor. I'll give an example. And you did the depreciation calculations because management asked you to do it. You did the computation of depreciation and the capitalization and all. Now, as a statutory auditor, I also want to verify. But management told me, why you want to verify? Internal auditor has already did it. So, or you can take even more simple example. stock verification. Internal auditor has done complete stock verification. Now, when I say I want to do it, the management said, why you want to bother yourself? They already did it. So then there are two ways for me to do it. One is, when you did the depreciation and that example, I can ask you, give me all the information, what you have collected, so that I can calculate. So that is one way. Or if I trust you more, then anyway you have calculated, then I don't need that information. Now you have already calculated. Then so are you okay with that? If you say okay, then I am straight away taking that picture. So that way, in the first case, auditor is obtaining the information from the internal auditor and he himself is performing that. And in the second case, auditor is not, stat auditor don't want to do anything. He simply want to rely on the work of the internal auditor. Now between first two, now you tell me where the external auditor is relying too much. Second one. So in the second one, I'm not doing anything. You already did it. I am taking your report and commenting. So that is the understanding. And the third one is the most important one. That is the reason why this standard has been revised. Direct assistance. So when you say direct assistant, the internal auditors were asked to work under the guidance and supervision of stat auditor. So now in the first two scenarios, they are working different. But in the third scenario, direct assistance, the stat auditor is taking the direct assistance of the internal auditor. So as if he is a member of this external auditor. So that is what is this direct assistance. Then moving further, I am touching only the charts which are important for you and considering the time available and this. What are the objectives of stat auditor? So stat auditor is, then again we need to ask when, because there are two ways how statutory auditor is using internal auditor. In situation one, internal auditor is independent. Like I said, you did the work, I didn't monitor, so I am taking your work and seeing. In the second case, you are working under me. So that is the direct assistance. So what are the objectives of stat auditor would depend on whether the internal auditor is independent or internal auditor is part of the stat audit team. That is the direct assistance. So if it is a direct assistance, the second one first, that is internal auditor is not deciding what to do. It is the stat auditor who is deciding what to do. So if it is a direct assistance, then I have to direct, supervise and all that. That is my objective. So my objective is to get the work from you. I have to direct you what you have to do. I have to supervise what you have done. And I have to review the work what you did it after that. And in the first case, in case if the internal auditor is independent, then my objective is to see that before I rely whether the work that you did it is adequate for me. That is where this point will come. How do I evaluate the internal audit function? So this is required. Now you tell me, whenever you are talking about it, it comes under which model? Where the internal auditor is working like a team of stat auditor or internal auditor working independently? Independently. So I repeat it. There are two types of internal auditors. For understanding these charts and the flows and the standard, first you have to be clear with the basic fundamentals. Internal auditor can work in two ways. One is independently, he himself is deciding whether the sample size, methodologies and all, he is preparing the report and issuing. That is one side. On the other side, internal auditor is not going to do anything. He is simply going to work on the part of the stat auditor. That's all. He will listen to what the stat auditor says. So if I am the stat auditor, that second one what we call as a direct assistance. So imagine you are the internal audit team. Then I'm not asking you, you decide what to do. I will tell you, just come. I will tell you what you have to do. So my reliance in direct assistance is much more. But when you are working independently, I may not be able to blindly take your report. So that's why the standard saying, because you didn't direct him, you didn't supervise, so he did it all that. Then whenever you are depending on his work, see all this. Whether there was an objectivity, that is without bias, easy related, easy, that is easy really independent. Say suppose internal auditor happened to be the son of MD, then I may not rely on his report. Maybe he would have given a beautiful report, but I don't trust it because he happened to be a relative. Likewise, the first point is is that internal auditor independent? So what is the objectivity? That is, was there any bias in his work? For that, I will see all this. Organizational status of internal auditor and employment conditions, restrictions with those charged with the governance, and then free of conflicting responsibilities. And then, okay, then I came to know, no, he is not dependent, he is not a relative, he is working independently. Then I come to the next point, but is he competent enough to work? So how many years experience he is, what is his qualification, and what is the work being done? So I'll verify the competence of it. And finally, he may be competent, he is independent, but how did he do the work? Now, was there a proper disciplined approach? Like, has he prepared the audit plan? Has he prepared the sample selected list? So, was it done in a disciplined manner? So, all these three will help me as a stat auditor, whether I should depend on the internal auditor or I should not depend on the work of the internal auditor. This is what is this evaluation. Then he is talking about where can I use, wherever I am using internal auditor, where I can use him. So where internal auditor can be used and where internal auditor cannot be used. Now that is the direct assistance. Internal auditor can be used for these things: testing of controls, routine activities, basically testing of controls, substantive procedures, inventory count, that is the physical verification, and tracing of transactions, the vouching part, what we call, and testing of compliance requirements and all that. In these areas, routine areas, I can take the help of internal auditor. So, but these areas where there is no objectivity of the internal auditor, or he lacks competence, or he lacks disciplined work approach, then I should not depend on him at all. I should do the work myself. So that is what he is trying to talk about through this chart. Then moving further to it, wherever, now we are coming to the other side of it, direct assistance. Wherever the internal auditor is providing direct assistance to the stat auditor, then is it okay? So that is what we are talking about. Can the stat auditor take the direct assistance of the internal auditor? These matters have to be considered. First one, prohibition by the law. Is there a prohibition by any law or regulation? So by the specific acts, I have to see that. And then, is there any threat to the objectivity? Meaning, since internal auditor is not supposed to be dependent, what if internal auditor happened to be a relative of the director? Then I can't take the direct assistance because there is no independence of him. Whereas the stat auditor need to be independent. Not only me, my team also should be independent. So that's what is the second point. Third point, lack of competence. If the internal auditor is not capable, I don't, because he is a youngster, just passed and all that, or he's a BCom guy, only having tax consultancies and all that, then I don't want to use him. So I don't want to use the direct assistance. And then written agreement from the management. That is, I may want to use, but since the payments to that person is made by the management should be okay for me to use them. So I have to take the permission of the management, because when they have hired them, they may have a different plan. I can't divert it. So because I'm not paying to the internal auditor, that's why I need a written consent from the management. Apart from all, internal auditor also should be ready to work under me, because since we are all professionals, management may be ready, say that go and work, but why a CA will work under another CA? So the internal auditor also must be willing to work under the guidance of this external auditor. So to sum it up, can I take the direct assistance of an internal auditor? Now you can take. The standard allows you to take. But before that, see all this. Is it restricted by any law? Or is there any threat to the objectivity? That is he really independent, whereby you can take him as a team member? And is he competent enough? And did you check with the management? And did you check with the internal auditor? If all of them are there, then you can take the direct assistance. So, and despite this, this is also important. He is asking in bits and pieces. That is, I checked about internal auditor, he is independent, the law allows me to do it, and there is no threat of objectivity because he is a totally independent guy and he is capable guy. So management is okay, he is also okay. Then can I ask him to do whatever I want to do? No. So even if all these points are satisfied, I cannot use internal auditor for these purposes. So I can use him only for regular routine activities, what we talked, inventory count and all. But I cannot use internal auditor for these purposes. That is involving significant judgments and high risk of material misstatement, and where internal auditor is directly involved in that process, and where there will be it will create a conflicting of interest type and compliance with the standards. These four matters, as a stat auditor, I can't delegate it to anyone. I have to do it myself. So this is what is the overview of this internal audit standard and all at a very high level. This is a big standard. This discussion itself will go on for more than 2-3 hours, but we can't afford. So to sum it up, it's simple. What are the ways? How I am trying to wrap it up in simple ways. Later on, you can read them. What are the simple ways how a stat auditor can take the help of internal auditor? Two ways. Let him be independent, let him decide what you want to do, and then you take his report and make use of for your report. That is one. Or absorb, that is take a direct assistance from him and you start directing. So both ways are acceptable. So that is, but then whenever I want to take him as a direct assistance, can I take it directly? Is it my own decision? No, you got to consider these points. So, and by if all these are satisfied, then can I use him as a part of stat audit? Can I ask him to prepare my audit report and all that? No, answer is no. For these four areas, you cannot delegate. It has to be done by your firm only, and you cannot delegate it to internal auditors. So this is what is the brief of all this internal audit concept and all that. And then we move to this sampling. This chapter of the next standard, audit sampling. We'll cover this sampling and then go for the break. Now, under SF 530, audit sampling, it is a important standard, and category wise, it comes under A category. You must read this one. It's simple, but luckily for you, it is simple, and he is asking questions, but nevertheless, you can still manage. Now, what do you mean by sample? To begin with the definition of it, what do I mean by sample? One word, simple, less than 100%. So less than 100% is what I mean by sample. Then moving further to it, there are two types of sampling methods, statistical and non-statistical. Since it is a simple one, I will ask you directly questions. Now, which one is more scientific here? Statistical. And why is it more scientific? Because it is using the knowledge of maths and stat, so probabilities. That is why it is more scientific. Whereas under non-statistical, how the auditor is picking up the samples, he is picking up the samples based on the personal experience of the auditor. So which is objective here? Which is objective and scientific? Statistical is more objective because it is following the rules of this and the knowledge of the maths and stat and all that. So these are the two methods of sampling that are available for the auditor. Then factors influencing sample, I will go directly to the important ones. Stratification, the most important one, and you are getting questions, short answer questions on what do you mean by stratification and how it is done and all that. Now, this stratification is nothing but dividing a population into discrete, that is the separate subpopulation. That is what we call this as stratification. So to repeat it, stratification is nothing but dividing a population into discrete subpopulation which is having identifiable characteristics. Say, for example, it's like this. Say, when I want to do a survey and the survey happened to be, when the population is a combination of men and women, then I can't just randomly take 4 people. Then what happens if all 3 happen to be women? Or what if all 3 happen to be men? So then I may have my results may not be accurate. So what I'm doing, in the population, the items having similar characteristics like men and women, I'm segregating And then instead of randomly taking 4, now I am taking 2 from the men, 2 from the women, so that my judgment becomes more logical. So this is what is the background you have to keep in mind to understand what do you mean by stratified sampling. But to look at back to it, what do I mean by stratified sampling? Dividing the population into subpopulation which are having equal identifiable characteristics. Like in our group, all the human beings are divided into men and women separately because the choice could be different. So then picking up the samplation from each strata, that is what it is. Then why am I doing it? This objectivity, take 3 stars and mark it as MCQ. He is asking one objective of it. Why am I stratifying? What is that I get it? I am doing it so that I can reduce the variability involved in this population. So now that I segregated men separate and women separate, the variability will not be there in the judgment. So that is what is the objective of it. Then on what basis I do? So though here for understanding we took human beings, but generally that is for statistical people. But for us, we always work with the numbers. So how do we do that? We do that based on the monetary value. So that is high value transactions, low value transactions. So we do this stratification based on the monetary value. But what is the limitation? So the limitation is only in the projection. So since the population is divided into subpopulation, any projection of errors you are making will be limited only to that particular strata. So that is the only limitation. So to repeat it, what do I mean by stratification? Now you tell me, how do I define stratification? Dividing what to what? Dividing population into subpopulation having equal characteristics. Then why am I doing? What is the objective of stratification? To increase the variability or to reduce the variability? To reduce the variability of it is why I am doing. Then what basis I do that segregation? Based on the monetary value. And the only limitation here is the projection can be made only to the particular subgroup. So that is what we call it as a strata. So, but I may have to do multiple this projections. So that's the only difference and the limitation of this stratification. And he's asking this question, you will get it. What is the, like say I'll put this here. What are the factors influencing sample size? Say, what factors will influence my sample size? Various factors, like say, higher risk of material misstatement. If the risk of material misstatement is higher, that is, I know that it is a sensitive item and the chances of it becoming error is very high. Then when I expect that it can go wrong very high, then I will select more sample, larger sample will be picked up. Then increase in the use of other substantive procedures. When you are going to do more on substantive procedures, then sample size will decrease because you are performing more and more procedures. Then increase in the auditor's desired level of assurance. That is, I want to have more satisfaction. So when I want to have more satisfaction, I have to work a lot. So then I have to select more samples. So say there are 100. I picked up only 2. Now 2 are correct. Then can I say that because 2 out of 2 are correct, all 100% accuracy, that is where, am I okay with that? But if I want more satisfaction for myself, then I have to check more samples. Then increase in tolerable misstatement. That is, what is the amount up to which you can tolerate? If that amount is increasing, then sample size will automatically decrease. And then greater the amount of misstatement, the auditor expects to find in it. Say, that is, auditor's expectation of errors in the population. If I am expecting more errors in the population, then obviously I will select higher sample. So larger sample will be selected. Then stratification. If the stratification is proper, then I can select less sample and manage it. Otherwise, I may have to select more samples. So probably from the video or whatever, you take the screenshot and revise one day before the exam. Any MCQs he is asking, logically you will be able to recollect the same points he is talking about it, which we put it in a simple manner to it. Then what are the sample selection methods? Now instead of this, let us look at R chart because that is confusing. So we'll go by R chart. So what are the sample selection methods? Now it depends on which method I am using, statistical or non-statistical. If it is statistical, then there are three methods: random sampling, systematic sampling, and monetary sampling. And non-statistical, haphazard and black sampling. Now random sampling. In the random sampling, there are two types: simple random and stratified random. And systematic sampling, that we need to discuss. Now, when you say systematic sampling, the systematic sampling is also called interval sampling. So, you are being asked these two questions. One is the stratification, and at times he is asking you about the systematic sampling. So just be clear with that. So systematic sampling is also called interval sampling. So in this, like in the diagram that you can see, what you are going to do first is identify the interval. How do I get the interval? Total population by the total sample size I want. That will give me the interval. Then that interval, what do I do? First item I will select at random, and second item I will do it by adding the value to it. So if I add value, if I add this interval to the first item, I will get the second item. If I add the interval to the second item, I will get the third item. So likewise I do it. The advantage is, see in this, whatever the 10 samples, if I go for a random, all samples probably would have come only from this lot. There is a risk. So then all these three lots I am ignoring. So to avoid that probability, and I want to have a disciplined approach, that is where this systematic. So if you look at the diagram, now all samples are picked up from all lots. So that is why you are getting to test the entire population in a proper manner. That is what is this systematic sampling. I repeat, under systematic sampling, what do we do? First we will find interval. How do I find my interval? Total population by total sample size. I get the interval. Then what do? I select the first item at random and then keep on adding interval to get my subsequent items. So that is what is my systematic sampling, which we discussed it. And then haphazard sampling. Haphazard sampling is where I am selecting the samples without any technique. So it is just like what my mind says, like in the celebrity shows and game shows and all that. How will they pick the winner from the lottery tickets? Likewise, that is haphazard sampling. And block sampling, I'm going to select continuous items. So continuous items of it. Instead of random one item, I'm going to put a block of 5 or 10 and all that, and I'm going to select that entire block of it. So these are all the methods, various methods that I'm having. To repeat it: statistical, non-statistical. Now you tell me, under statistical, what are the three methods that I'm having? Random sampling, systematic sampling, and monetary sampling. And under non-statistical, two methods: haphazard sampling and block sampling. So this is what are the points that are relevant to it. Then look at this last chart. So because this is very rarely he is asking, but most of the times you go wrong in understanding. So carefully look at it. What do I do when I am performing? Look at the table. The chart is a self-explanatory basically. Say if the audit procedure is not applicable to the selected item, so then what should I do? So if the item what you have selected in sample is not matching to the objective of it, then change the sample. Like for example, you are verifying certain payments, payment vouchers, and one of the voucher came as a cancelled check. So, but you wanted to verify the payments. So what do? Then you move on to the next voucher. So replace it with another one. But in the second case, the auditor is unable to apply the designated audit procedures to the selected item. Item is correct, but auditor is not able to perform it. Like missing invoice. I am verifying the sales, but I selected 10 invoices, but in one invoice when I ask the client, the invoice itself is missing. So then I don't replace it. So then I call it as an exception. So because the item I am unable to apply to it. So in which case it is considered as a misstatement, and the example is missing invoice while verifying the sales and all that. So this is what the last point that he can ask for it. And this is as usual. When I did my samples, what do if there are deviations identified in my samples? So if there are deviations or misstatements identified in the sample, same logics. Identify the reasons, evaluate the impact of it and go for the modification, perform additional audit procedures, and not convinced, go for the modification of it. That's all. And from MCQ's perspective, one last topic from the MCQs is, here projecting misstatements to the entire population is mandatory. But while projecting, where projection is permitted, where projection is not permitted, test of controls not permitted, not really applicable, and this projection is applicable only for test of details. For test of controls, this explicit projection may not be really relevant. So test of controls, it is not applicable, and it will be applied only for test of details. So this is what is this SA 530 brief of it. Now quickly what we will do is go for a 5 minutes break and come back as soon as possible, so that we will try to cover as many standards as possible out of this chapter 4 of it. Try to come back early. Last 1 hour, so quickly get on to it. Now this SA 501, it also deals with audit evidence. But the difference between SA 500 and 501 is, SA 500 deals with all types of cases. It's a general discussion. But SA 501, it deals with audit evidence with regard to specific consideration of selected items. Then what are the items that are covered in SA 501? This is basically easy standard. You can even cope up with this. So I will go a little fast here. So there are 3 matters that are covered under SA 501: inventory, litigation and claims, and segment information. And what is that auditor is looking at each of this item? With regard to inventory, he is looking at existence and the condition of the inventory. And with regard to litigation and claims, he is looking at the completion from the disclosure perspective. And with regard to segment information, whether the presentation and disclosures are as per the applicable standards. This is the broad objective of the auditor. Coming to this physical verification of inventory, what is the responsibility of each of them? Say, the responsibility for conducting physical verification always lies with the management. So it is the management which has to conduct the physical verification. Then what is the auditor's responsibility? To ensure that the management has conducted the physical verification. This is the auditor's responsibility. That is where a question can come, and he is asking in the examination, when it is the responsibility of the management to conduct the physical verification, then is attendance of the auditor, statutory auditor, is mandatory under for the fiscal verification. So attendance of the auditor at the PV counting, is it mandatory? So the answer is simple. It is mandatory unless it is impractical. That's all. So it is mandatory unless it is impractical. Then why he should attend when the management is doing it? He should still attend to evaluate the management procedures and observe the account procedures, how are they doing and all. If required, even perform the test controls and to inspect the inventory about the condition. These are the reasons why the auditor's attendance is still mandatory. So unless it is becoming impractical. So that is what is the point that we talked about. Then I'm directly getting into the summary. The additional points that are talked in SA 501 is it necessary for the auditor to conduct this fiscal verification only on the balance sheet date? Because we are certifying inventory. So as on the balance sheet, inventory is a dynamic number. It's a current asset. So therefore, when I am certifying the value as of 31st March, do I have to verify it only as of 31st March? That is the question. Now, not necessary. Auditor can conduct the PV on any other date also, apart from the balance sheet date. But only thing is, if he is not conducting on the date of balance sheet, then he must ensure that the changes are properly recorded between the count date and the balance sheet date. So, answer is yes, he can do it, but he has to reconcile between the two dates. He has to work backwards or forward depending on when he is doing it. Then the next topic is, what happens if the PV itself has become impracticable to conduct because of strikes, lockouts, monsoons, floods, or whatever it is? What if PV has become impracticable? So then try to perform alternate procedures. If that is not possible, then modify it. It may be the government problem, it may be the weather problem, whatever it is. But as an auditor, you have to ensure that fiscal verification is done. If it is not done, try to manage it through alternate procedures. If that is also not possible, modify the report. Then the question comes, what do I do? Since fiscal verification is mandatory, but for certain industries, their assets will be with the third parties, like telecom industries and soft drinks in industries and all that. Then what do I do? So if inventory is with the third party, then request for confirmation. That is, you don't have to go physically to see that. Request for confirmation from the third party. If not permitted, perform alternate procedures. If that is also not possible, then modify it. So this is what are the points that are required to be kept in mind whenever the auditor is considering this. So those are the additional points. Then with regard to the second item, legality. So legal litigations and claims. So for litigations and claims, what are the three audit procedures auditor? Because since I want to ensure the completeness, how do I know what are all the legal cases filed on the company? Somebody would have filed a case in Assam, somebody would have filed a case in Punjab. How do I know? Now, where is the database? How do I get it? That's why what they say is, with regard to litigations and claims, first auditor will have to inquire with the management and the legal counsel, because some companies will have their legal advocates. So, company attached advocates. So, I need to discuss with them and review the minutes. So, because if it is a critical case, the management must be discussing it in the meetings. How do we go about? So, review the minutes. And third one, review the ledger expense account, so that this legal expense ledger, if you see, you will come to know. Expense ledgers, if you see, then you can make out whom all the lawyers they are paying and why they are paying, what case they are arguing. So, these are the three ways how you can do it to ensure that litigations that are there are complete. But only one odd time he had asked a question, because here he says discuss with the management and the legal counsel. But what if I am not allowed to do that, or if I am discussing, what I have to discuss with them? Say 2 points. Here they simply say that discuss with the legal counsel. Now, what do I go and discuss with them? Now, do I discuss about the chances of winning or losing? What do I discuss? That's why they are saying, whenever you meet the management or their external legal counsel, discuss these things. Take a list from them. What are all the litigations the company is filing, and what is the management's expectation of the outcome? Now, if the management feels they are going to win the case, it is all right. If the management feels there are chances of losing the case, then have you made a provision for the ones which you are not confident? And the third one, whenever the management is giving their assessment, confirmation on the reasonableness of the management assessment. That is, you are asking the lawyer, you are asking the advocate, management feels they will win it. But do you agree with the management? Do you really feel that the management is correct in their guess? So these are the three things that I will be discussing with the external counsel. And the last point, what do I do if I am not allowed to speak to the external counsel? Because the management says, no, you can't speak to me. He's our lawyer. We don't allow. So, the management said, go and speak to him. But the lawyer is not giving information. He says, I can't share. Like, it happens. Say, I'm filing IT return for you. Now, your brother comes and asks me, now, how much is my brother's income? I will not tell him. So, because that is a confidentiality, I will have to maintain. That way, point one, management itself may not allow. Point number two, management has allowed, but the advocate is not revealing it by talking about professional ethics. Then what do I do? So, then auditor will have to modify the report. So, putting it simply the other way around, auditor is going to modify the report in two scenarios. He is not allowed to speak, or he is allowed to speak, but the legal counsel is not giving information. Then I will modify the report. So this is with regard to litigations and claims and all this. Then segment information is very simple. Segment information, you follow the standard. So all that I have to ask the management is, how did they identify the segments in the first place? What is the method they have adopted to identify? Then I will test check to see, is that method logical? Is that method practical? So, and after satisfying for my own documentation, I will perform little analytical procedures to see whether this information what they have given is appearing to be appropriate or inappropriate. So this is with regard to this segment information. So, With that, this SA501 gets over. Then SA505, on and off, questions are being asked, but questions are being asked on selective topics. So we will cover those topics which are generally questioned in the examination. Now, first one is, what is external confirmation? So external confirmation is an audit evidence obtained by the auditor directly as a written response from a third party. So that is what we call it as an external confirmation. Now, I will, since this standard is a lengthy standard and we don't have that much time to discuss, I will get to the key points of it. Is this external confirmation supposed to be in paper form? Because he is asking questions, because that is the revision that had happened. Earlier, it was supposed to be in a paper form. That is, any third party confirming, it should be on his letterhead with the stamp, seal, then only it will have a legal validity. So, earlier, the stand was it is supposed to be in a paper form. But now, emails are also accepted as a matter of communication. My external confirmation need not be in paper form. It can even be in an electronic form, like emails and all that, they are accepting now. So that is one important one. He is asking this. Then there are two types of confirmation, positive confirmation and negative confirmation. When I say positive confirmation, the response is required whether the other party, third party, agrees or disagrees with you. But negative confirmation is that kind of confirmation where you want the respondent to respond only if it disagrees with you. So that is what is the difference between positive confirmation and negative confirmation. So to repeat it, when you are sending positive confirmation, you want the party to respond in all cases. Whether he agrees, then let him say that he is agreeing. If he disagrees, then tell me how much is your amount. So, but you want a response from in all cases. But in negative confirmation, you will expect a response only when he disagrees. If he agrees, silence. So, silence is acceptance. So that is how it goes by in this other one. Then, what are the procedures? That is, whenever I am sending this external confirmation, then I need to keep certain controls. Then I need to keep certain points from my side. What are the points? First one, determine the information to be confirmed. So that is, do you want a detailed information or do you want a balance information? Now, if you ask only for the 31st March balance, say I am talking about debtors. Now I want only balance confirmation. Then what if my client has not recorded one invoice and one collection? So my sales are less because he don't want to pay tax, and cash he has collected, cash also is not recorded. So my client has done compensating error. He has not recorded the credit, he has not recorded the collection debit. So balance will ultimately tally, but I will not be able to identify unrecorded sales. So, but then I want a detailed information. But if I want the third party to confirm all sales and all payments, he may not confirm at all. Because particularly if he is having hundreds of transactions, he is a regular party, then if you ask little information, I'll give. If I ask too much information, then I'll say I don't know. So that way, as an auditor, I would prefer detailed information. But if I ask for detailed information, third party may not give any information. So that is where I got to choose then what is required in this case. So that is one point auditor had to take a call. Then the second one, who is the appropriate authority? Because when you say company, here it is simple. Take the confirmation from third parties. But from third parties, like say you want some confirmation from ICAI, you want to write a letter about some change in address. Whom will you write? There are so many departments, so many people, and whether your BOS is keeping a track of your address or you don't know which department, which person is taking. So that's where you, before writing any communication to him, you have to find out who is the appropriate authority. Because some companies are centralized and some companies work in decentralized mode. Maybe if the company is working in a centralized mode, you would have supplied the material to Hyderabad branch, but Hyderabad branch will not make the payment. You get the payment from Delhi branch. So that's why decentralization, centralization, all that, you need to identify who is the appropriate authority who can confirm you. And the third one, design the confirmation request. That is, you want it as a positive or a negative confirmation. Then the fourth one, send the request and do the follow-up. So after the method, then send the request, whatever it is, and do the proper follow-ups till the time you get all replies to it and all that. That is what is being asked. But one strange question is asking, you read all this what is given here, but he is asking, give examples where I want this external confirmation. So then you are supposed to write bank balance and vendor balances, and the vendor balance from the exam you can split into two: debtors confirmations and creditors confirmations, and then inventories, anything with the third parties. So likewise, you got to be little creative and talk about all this. What are all the various examples where you would be requiring this external confirmation? That is what he is asking it. Then moving further to it, this point is the one which is almost like 90% of the questions from this chapter, from the standard, are about this, what you are seeing it on the screen. So one is about the positive confirmation and the negative confirmation difference, and the second one, if you are good with these two, almost like you have completed the standard broadly. Now, the background of this is, whenever I am sending external confirmation, I must take the approval of the management. So if the management is not agreeing, if the management is refusing to allow the auditor to do it, then because without their permission, I can't simply write a letter to the third party. But as an investigator, he can do it. CBI won't take your permission. They will go directly and take the confirmation. But as an auditor, I can't do that. So I have to take the management's approval. But what if the management is not giving me approval? So same one, what if the management refuses to allow the auditor to send a confirmation? Then these are the steps that I have to follow. First one, inquire as to the reasons. Why they don't want me to send a letter? Is it that they are afraid that he may confirm a wrong balance? So why is that? The normal logical reasons could be which you can accept, or legal dispute or ongoing negotiation. Like say somebody had to pay some 10 lakh rupees. He's not been paying because he is into some problems and all that. You've already filed a case. So when the case is going on, and since the case is going on, they don't want you to communicate anything because you don't know how the lawyer of that other company can take advantage of it. So one small letter can turn the entire case. So that's why when you're already fighting a legal case, you don't want your auditor, because you don't enjoy the good relation with the client. So you're already filed a case. So why will he support you? So that's why you tell the auditor, he won't reply because I've already filed a legal case. He's angry on me. So are the legal issues. So that is the first acceptable scenario. Second one, ongoing negotiation. If any discussions are going on and resolving, and on top of it now auditor is sending, the client may get irritated. At one hand you are trying to negotiate and you ask a written confirmation. What is going on? That's why in these two scenarios, management may refuse you to allow it. So then it can be other reasons. Sometimes the management can be simply adamant. They say that no, we don't want you to write a letter, so we will only get you. They are unreasonable. If they are unreasonable, directly complain to those charged with the governance. That is, you communicate with them, and if they are also not supporting, modify the report. But what if the reasons are reasonable? So it's I don't see any fraud, but they appear to be correct in that. Then what should I do? So they may have their own legal reasons, but as an auditor, you got to do your job. But external confirmation is mandatory, but here there are some practical issues. Then you try to perform alternate procedures, that is subsequent payments and all that. If that is possible, it is all right. If that is also not possible, then you are not bothered about the legal issues and all, because you got to do your duty. Then tell those charged with the governance, I am not allowed. They are talking about legal issues. I understand, but this is a requirement. What do I do? So, and then modify the report. This is what is the sequence. So put it in a summary. What do I do if the management is refusing to allow me to send a communication? First, I will inquire the reasons. Either reasonable or I may find it unreasonable. If I find it unreasonable, point is simple. I will complain to, that is what we use the word communicate, to those charged with the governance and modify the report if they don't respond. Or reasonable. Even if I agree with them, yes, they have a logic. In this scenario, letter should not be sent. But I am an auditor. I have my own obligation. I understand your problem. But it's like say you don't have money to pay fees. Now management will understand your problem, but they have to run this, so they will still collect. Likewise, you have your reasons, but that doesn't stop me from doing my work. So then I will still, because I understand your practical problem, I try to perform this through alternate procedures. If I am able to do it, all right. If that is not possible, again the same thing. Communicate with those charged with the governance and modify the report. So these are the steps that I follow to it. And another question he is asking is, we talked about it. Now you tell me, my confirmations are of two types. External confirmations are of two types. What are the two types? Positive confirmation and negative confirmation. In which one I want respondent to respond in all cases? Positive confirmation. So in the negative confirmation, I am sending a letter. If no news, it goes by the premise that no news is a good news. So if you don't respond, then I am assuming you are agreeing. But all the cases, that is a, I mean, I can say that is your own logic. Others may not understand that. Just because you didn't respond, that doesn't mean that you are agreeing with me. So that's where ICAI also knows it. And ICAI says, don't depend on negative confirmation. Always try to send positive confirmation. So this is the background of that conversation. Now, what are we discussing here? Auditor shall not use negative confirmation request as the sole substantive procedure unless all of the following conditions are present. That is, unless all these conditions are present, auditor shall not use negative confirmation. Now, what are these points? First one, risk of material misstatement is very low. So since it is a negligible item, you don't expect anything to go wrong. It is all right. Then second one, large number of small balances. Each balance is small, but there are large number of accounts, C-class parties. Then it is all right. Send negative confirmation and manage. Third one, very low exception rate is expected. That is, as an auditor, you believe that maybe party may not, because in the sense you believe your client more. So like the fourth point, internal controls are effective. Because internal controls are effective, you believe that the exception, that is the probability of client not agreeing, may not arise. So in these situations, if all are present, then send negative confirmation. Otherwise, you got to send only positive confirmation. And the last leg of it, this chart, these two if we cover, this one will get over. But for the visibility, I will split it into two. Evaluation. Now, how do I evaluate? So whatever the responses I am getting, how do I evaluate? Responses received, no response is received. Now, responses received. Now, is the response reliable? And if the response is reliable, then again of two type. So it is reliable, but it is received with exception, without exception. If it is without exception, that is not debating anything, he is agreeing what you are saying, issue a clean report. But you have received the response is appearing to be reasonable, reliable, but it is with exception. Then what I have to do? Then I have to extend my areas, perform alternate procedures. If not satisfied, modify the report. But if I have not received any responses, or I have received but they don't appear to be reliable, somehow I don't want to believe them. So then what should I do? So if the response is not reliable, or you have not received any response, both are one and same. So then what do? I try to perform alternate procedures. If that is also not possible, then I will modify the report. So this is the summary of what are the evaluations, what an auditor had to do. And as I said, the continuation of it, that is what it is, non-response. When you don't receive any response, then doesn't mean that you go and modify. So it depends on what type of confirmation you have sent to him. So what you have sent to him is a negative confirmation and you have not received any response, then no news is a good news over there. So that is what we are trying to say. If no response to a negative confirmation means it suggests an agreement. The party is agreeing. That is why he didn't respond. So no action is required. That is what we say. No additional procedures are required because it's all appearing to be fine. But what you send is a positive confirmation where you expect the party to respond, but he didn't respond. Then what I have to do? I have to perform alternate procedures. If that is not possible, then it will amount to limitation on scope and I will modify. But in this case, when the third party is not responding, what is that my client can do it, but I don't care all that. It is your problem or whatever. ICAI want me to collect it. So if that is not possible, I will say that I'm not given. So then if you believe it is a third party problem, you deal with him. He is your customer. So don't tell me that what can I do if he is not giving. You have to do something. If both of you can't do anything, then I will go and report it. That's all. So that way, this is what auditor would do and consider when there is no response to a positive confirmation and no response to a negative confirmation. So with this, the standard of external confirmation will come to an end, and then we have got two big standards to discuss. Say one is SA 510, simple, it will get over fast, and then analytical procedures. So related parties is a negligible one, there is nothing much in that. Now SA 510, initial audit engagement, opening balances. So in this, from exam perspective, this is what is important. So many times he is asking you the definition itself. What do I mean by initial engagement? The definition itself is important. What do I mean by initial engagement? Initial engagement is a first engagement. So what do I mean by it? So initial engagement is either the financials for the prior period are not at all audited. That is, audit itself is first time for the entity. In the second case, it is audited but by a predecessor auditor. So that is auditor from a different firm. So it is not that audit is fast, but till last year somebody else were doing the audit. Now this time you are doing the audit. So but both of us, both the situations, we call it as an initial audit engagement. Then in the initial audit engagement, our challenge is to confirm the opening balances. Say, because as an auditor, you take, for example, your fixed assets. Now, I take your opening balance, and during the year, let's say opening balance is 100, and I'll write here what the point we are trying to talk about. Say, I'm doing an audit of a client. The opening balance is 100, and 50 is about the additions they've added. So the closing balance they are showing 150. So if I am the auditor for the current year, I am verifying 50 because I am the auditor for this period. During the year, they bought 50 lakhs worth of assets. I am adding it. But what I am confirming in the balance sheet as assets is 150. So that is where there is a difference. What you are verifying is 50. What you are confirming is 150. So because your closing balance, particularly in the balance sheet, includes your opening balance. So you are not verifying. Maybe this 100 is coming out of 10-15 years. That doesn't matter. So this gap is coming in the audit. What you are verifying is the current year transaction, but what you are confirming is the closing balances. Are you correct? So that is where what the ICAI says is, no, you have to confirm and verify the opening balance also, because what you are confirming is not that during the transactions, what you are confirming is the closing balance. Your closing balance is nothing but opening balance plus current year transactions. So to give a correct view to the reader, you must ensure that opening balances are correct. But my question is, how do I verify that opening balances are correct? It doesn't contain any misstatement. So this standard is saying, do I have to do an audit of it? No, you don't have to do the audit, but you have to do these three procedures. Point one, closing balances have been correctly brought forward. So like in +2 and all, you do that. Opening carry forward and brought forward. Did they carry the right, did they brought forward the correct balances? This is a simple clerical thing. Second one, application of accounting policies. Because whenever you are bringing opening balances, and particularly whenever there is a change in accounting policies, you got to be clear. So whether appropriate accounting policies have been. If there is a change in the accounting policy, then you have to make changes to the opening balance itself in certain cases. And the third one, audit procedures, that is obtain audit evidence in the current year with regard to opening balances. So all this you have to do, and then only you can conclude on it. Then he is talking about it. Matters affecting the nature and extent of procedure of verification. So when I'm verifying, that is as a part of this last one, what are the points I have to keep in mind? This point is a C category item. You can ignore it. I have to see that accounting policies are followed, nature of accounting balances, that is it what type of, is it sensitive one and all that, significance of it, is it material or immaterial, type of audit report, all that I have to see, that is immaterial. But this is important. So what do I do? That is, if the prior period financials are audited by a predecessor auditor, then how do I verify my opening balances? So if it is current assets and current liabilities, I can verify the subsequent payments. Physical verification, valuation, cut-offs I can do. But if it is a non-current asset, because since it may not have any follow-up transactions in the current year, then I will examine the accounting records, and if that is not possible, I get a confirmation from the third parties. So, but for most of you, the only question he is asking basically are 2 points. One is, what do you mean by this initial engagement? And second point is opening balances. That 3 steps you have to write, correctly brought forward and all that. And the last one, this also of late he is asking this more than the conclusion. That is, what do I do? When I have to modify my report. So, as an auditor, I shall modify my report if accounting policies are not applied consistently, or there are changes, but the changes are not disclosed properly. In these 2 cases, I have no choice but to modify my report. Conclusion is simple. And doing all this, what if I agree that all opening balances are correct, appropriate, then I will issue clean report. What if I believe that it is all contains misstatement, it is not correct, then I will give you adverse or qualified. What if I am unable to decide, then you go for disclaimer or qualified. So depending on material and pervasive and all that. So that is that initial engagement standard. Then summing up this SA 550, very negligible standard, related parties. Only the definition is what to be talked about. Otherwise, there is nothing. Say, who are related parties? So, this related parties, the definition goes by what the standard says is, because since we have got different definitions of related parties under different tax, ICAI don't want to interfere. What they say is, if it is defined in the FRF, what you are following, then follow the definition. Don't follow separately anything for the sake of audit. So, but if it is not defined in the FRF, then all these 3 scenarios would become a related party. That is, entity controlling the reporting entity will be your, that is, somebody is controlling you. Reporting entity is your client. So, any entity controlling reporting entity is a related party. Or the second one, entity controlled by your client. So, somebody is controlling you, you are controlling someone, or the third one, common control. So, in all these 3 cases, it will become a related party. Now, when you say common control, what do I mean? 3 scenarios. Either there is a common ownership, that is, the owners are known to each other and all that, same person is owning, or the owners are family members. Like I said, 3 brothers, one brother is handling X Limited, another brother Y Limited. So, owners are from the same family. So, these companies will become these related parties, and common KMPs. So, that is, you have a common people to control it. So, this is what it is. And apart from that, what is the risk in that related parties is, auditor had to see there may be a relation, but is it control or is it significant influence? So, it is the conceptual based. At interlevel, I don't think he will get into it. Just because it is a related party, then because the probabilities of frauds with the related parties is very high. So in that background, he is looking at this. Now, we have to see between the related parties, is it the control or significant influence? If it is, when do you say control, when do you say significant influence? If one party can govern, meaning full authority about the financial and operating policies of the other company, then you use the word control. But in the second one, they can't control so much, but they can participate in that. So that is, you have a partial say. So not the complete say. Then it is called as a significant influence. Whatever it is, whether it is a control or a significant influence, auditor had to be more careful. So, and the last point, what are the special considerations with regard to related parties? These 3. Related parties with dominant influence. So, they are related, but one party is having a dominant influence, capacity of dominant influence. Then, the auditor had to be careful because the fraud risk is very high in this case. So, auditor had to be more careful. And in the second case, special purpose entities like CSR purpose and all this kind of stuff. So these entities are the core investment companies and these kind of stuff. It will become a related party even if there is no significant control or anything, control or influence. It will still become a related party. There may not be any cross investments or anything, but still it should be treated as a related party. Then the standard says, how do I analyze all this for smaller entities? So for smaller entities, it will become very difficult because no documented process will be there to identify the related parties. So that is the challenge with the smaller parties. So summing it up, what is more important in this is the definition of related party. But what needs to be disclosed is the nature of relation, you know, from accounting standard. The list of parties, nature of relation, and the account balances. All that you can talk about from your accounting background and all that. Then only once he had asked, very practical question. Okay, we are talking about the definition, how one entity can control another entity, all that is a theory. But in reality, because now the questions are more practical, now he is asking, how do I know the existence of a related party? Because by definition you said, if you are controlling them, they are controlling, all that are fine, theory. But what books I have to verify to see that who my entity company is controlling? How do I know which other companies are under my client's control? So that is why they say, what are the documents you have to verify? So I rate this as more probable question, because nowadays the questions are very practical rather than simply being asked from the definition perspective, because the traditional questions were more from the content. But the modern questions and the latest questions are more with a practical approach. So he can ask you, how do I know what documents I have to verify to see that there is a relationship between the parties? How do I know who is controlling my party and all? That is why he has given huge list of things that you can verify to see the existence of a related party. What are the documents? One is the IT return, and second one is the regulatory filings with the SAB and all that, and shareholders register to see whether 50%, 20%, what is the investment and all that, and management conflict of interest statements. Because if it is a listed entity, the managements, that is the directors, will give which other companies they are directors. They are supposed to confirm. So there are certain companies act sections. So let's not get into too details. So that statements, the declarations by the management, I will see that. And then investment and pension records, I will see whether how these payments have been made. So I will come to know the special purpose entities which are linked to it. And key management contracts, so whom they are giving, and if particular contracts are given continuously to one party, then I can little dig into it, I can make out. Then non-routine significant contracts, so it is non-routine but very significant, of late one site or one time or less times, that you can make out. Professional advisors invoices, when you check the invoices of some people, then you can identify what services are they doing and why are they doing. And then LIC policies. Why LIC policies are important is, if the company has paying the premium of life insurance of some person, then you know that he is a shadow director. So something like that. So that LIC policies also will tell you. And internal audit reports, they would have identified themselves in their workings. And then securities regulator filing. This is almost like the second point, repetitive. So your SEBIs and all this kind of one. So these are the documents that I review to identify how the related party relation can exist. So this can be, there is a probability of this question to come, because now the questions are mostly the practical in nature. Now we are coming up and landing up on the last and important standard, that is analytical procedures. Now this is so important because this was a separate chapter itself in the earlier syllabus. So but now that students are complaining there are too many chapters and all that, what he did is that he just brought it and dumped it here. But otherwise this was being dealt as a separate chapter itself. So this is a category standard that we need to discuss. Now analytical procedures. First it starts with, what do I mean by analytical procedures? So here itself we are getting a lot of questions on this. What do I mean by analytical procedure? When I say analytical procedure, the procedures which involve the evaluation of financial information through analysis of relationships between both financial and non-financial data. So taking for example salaries. Now whenever I am verifying salaries, like say last time they paid 60 lakhs, this year they paid 80 lakhs. But then is 80 lakhs right or wrong? Then I need to, just looking at 60 lakhs I can't make out. So I have to look at what are the number of employees last time and what are the number of employees this year. So this combination can help me identifying whether my 80 lakhs current year is right or wrong. So to cut short, what are my analytical procedures? My analytical procedures are the procedures that is nothing but evaluating financial information through relationships. How I am doing it is, it's not a routine process. It is not a routine procedure. It is, I am doing it through analysis of relationship between what? Between financial data and non-financial data. So that is, generally as an auditor, I am concerned only with the financial data. So we don't verify any non-financial data. We are not concerned. Like for example, whenever you take this building on rent, now as an auditor, when you are verifying the P&L account, you check only what is the rent amount given in the P&L and what is the rent amount as per the agreement. But you don't get into what is the SFT. Say, is it 5,000 SFT or 7,500 SFT? That is a non-financial data. You don't bother about it. So, but in this analytical procedures, auditor would be verifying this. So this is what is the many questions you see. Like say, one question it says analytical procedures are about analyzing the relations among financial data only, because as a finance person, normally my data verification is restricted to financial data, but only in this analytical procedures I go one step ahead. So not only financial data but also non-financial data I consider. Then another question that he is asking is it a routine audit checking? Say, analytical procedures is not a routine checking. Your substantive procedures and all are routine checking, but analytical procedures is a non-routine, because what you have to analyze and how you have to analyze, it is a skill. So that is required. So therefore, it is not a routine audit checking. So you see so many questions on that angle. Another question asked is, auditor can depend on routine checks to disclose all the mistakes. No, routine checks you may not be able to identify. You have to perform analytical procedures. So this is how you get your questions. Then from the definition. Then moving on to the next one. This analytical procedures, where do I apply? Is it applicable only for SFS? Or is it applicable for CFS, that is consolidated or standalone financials? That's why they say, wherever you are doing audit, it is applicable to everywhere. It is applicable to consolidated financials. It is applicable to standalone financials. It is also applicable to individual elements in the financials. Like one item in the financial, rent, salaries, whatever I am doing, it may be applicable. So it is applicable in all types of scenarios, CFS, SFS or individual items. Then objectives and purpose. Why am I doing it? What is the objective of this analytical procedure? The objective of analytical procedure, the basic objective is to obtain SAAE. That is the basic purpose. And what will I do with that SAAE? To assist the auditor in forming overall conclusions. So with the evidence that I am getting an analytical procedure, individually I am able to get the conclusion on all this. But for forming overall conclusions, this analytical procedures will help me. Then I will just go to the direct important point. That is, what are the techniques that are available for my analytical procedures? What techniques are available? There are 4 techniques that are available while performing analytical procedures. One is a trend analysis. Second is the ratio analysis. He is asking questions. This is a short answer question. One is on the definition and another frequent question is on the techniques. So these two are repeatedly being questioned. So trend analysis, ratio analysis, reasonableness test, and the last one is a structural modeling. Example is, when you say trend analysis, current year versus previous years. That is one way how I can identify. And ratio analysis, that is the ratios, gross profit ratio, net profit ratios and all that. And reasonableness test. So where you compare certain elements, that is the comparable ones, like salaries and the number of people, rent and the area occupied, and consumption versus production, likewise, and interest versus loan. That is in the balance sheet, if the loan amount has gone up, then in the P&L interest also should go up. So that relationships is what I look at it. From exam perspective, this third point, reasonableness test, he is asking specific questions for you. So that is, as an auditor, what are the examples where I can apply my reasonableness test? So he is asking as an example of it. Then moving further, there are a lot of questions on this process and procedures of analytical procedures. Then final one come to it. That is, while performing analytical procedures, what if I get unreasonable results? So that is, while performing analytical procedures, I am not convinced with the, that is, there is a variance between what is reported, actual figures, and what I am predicting or projecting based on my analytical procedures. So whenever there is a variance, that unreasonable results identified by the auditor, for example, the same one you take, let's say, because since he is asking, I will hold for a minute, I'll go a little slow and tell you. Say last time, the salary is 60 crore and the number of employees were 60, just imagine. And this is the previous year. And in the current year, I came to know that there are 80 employees. Now, when there are 80 employees, by applying the common sense, for 60 employees, 60 crore is the amount. But for 80 employees, I am expecting a figure of 80 crore. This is my projected figure. But actually, the company is showing only 50 crore. So, there is a difference. That is where I am surprised when the number of employees have gone up, how your salary figure is coming down. So, there may be, this is what we are seeing. This is the projected figure. This is the actual figure. So, now there is a variance. Now, what do I do? So, that is what is the big discussion. In case of unreasonable results identified by the auditor, then what an auditor should do? Now, first I will check with the management, because there may be logics. Like in the given example, number of employees have gone up, but my overall salary had come down. It is quite possible, maybe because they have removed the high paid salaries employees and they started recruiting the base level employees. With the AI, that is only happening. So, because AI can help in taking management decisions, but still AI to do analysis, it requires data. So, the base people are required, but the middle level management is not required. So they have removed the high paid employees and they started recruiting the lower level employees. So number wise employees are more, but overall salary cost is less. So that is what, once I inquire with the management, if I am satisfied, I will drop it over there. But I am not convinced, then I will perform other procedures. If inconsistencies still persist, even with that, then I will go for a modification of a report. So these are common steps everywhere. So not just in analytical procedures, everywhere. Wherever there are unreasonable results, that is your actual amount and the projected amount are differing, what do I do? 3 steps. Inquire with the management and perform other audit procedures. If that is not possible, if that inconsistency is still there, modify the report. That's all. So that is what is the last step of my analytical procedure. So with this standard also comes to an end. So, but since this is an important standard and mostly he is asking, I will just go back and touch one more time on what are the important points out of this analytical procedures, and then we'll wind up the classes. Now, what are analytical procedures? Analytical procedure, the definition itself is important. That is evaluation of financial information. And how am I evaluating? Through analysis of relationships. And relationships between whom? Between what? Between financial and non-financial data. So that is what it is. Now you tell me, are these analytical procedures routine or non-routine? Because he is asking that. Is it routine or non-routine? So this analytical procedures is non-routine. Then what are routine if you see this, we didn't get time to discuss this audit procedures. This is where this analytical procedures comes. And this test of details, all these are routine. That is the verification of, like if we say travel, verifying with the travel bills. If we say rent, verifying with the rental agreement. If we say salaries, verifying with the pay slips. That is all routine. So all these are routine. But this analytical procedure is non-routine. It is an intelligent job. So, because he is asking this questions based on that analysis. So, to sum it up, analytical procedures are not routine, not a part of routine ones. Analytical procedures is a non-routine intelligent analysis. So, and what is then, why do we need this analytical procedures? We need it because by simply verifying in a routine method, you will not be able to identify all errors because clients are super smart. They can create fake supporting documents. So, unless you do this analytical procedures, you will not be able to identify and satisfy yourself. That is where as an auditor, I cannot identify all misstatements through only this routine procedures. That is where I require analytical procedures. And the next point he is asking is, what are the techniques? I'm going directly to that important point. What are the 4 techniques that are there in analytical procedures? Now you repeat. So, what are the 4 techniques that I'm having in analytical procedures? Trend analysis, ratio analysis, reasonableness test, and structural modeling. And he is asking specifically to give you examples on the reasonableness test. So you can give all these relatable ones. Like I said, salaries and number of employees, and rent and area of this one, and interest and loan, consumption versus production, and sales commission. You can give many things, discount and the sales. So likewise, many things, and GST amount and the sale amount, all this. So that is reasonableness test, and he is asking you. And moving further to it, then what do I do? I'm going to the last point of it. Then what do I do if my analytical procedures have given unreasonable result? Then I will do 3 things. Inquire with the management, perform additional audit procedures, and if an inconsistency is still there, then I will go for modification. That's all. So with this chapter 4 also, we are done with that. So with this, let us stop at this point of time, because hardly we are left with 15 minutes. 15 minutes, we will not be able to cover anything. And the remaining, if I take chapter 3 and all that, it is a huge topic. So we will have to discuss the risk and types of risk and all that, audit risk and all. We will not be able to discuss anything. So we'll stop it. And I will try to make a video of that remaining chapters and try to upload in the YouTube directly to it. So you can do it. So with this, let's stop at this point of time. And thank you very much for your patient listening to it. Thank you.